30th of this 30th May, I have launched another book. Well, today's topic is very important. I can see some familiar faces. Anil ji, namaskar. Astha ma'am, hello, Sudita ma'am. So let me get straight into the topic, why we are reading this topic. See, when I choose this topic and Divjyoti Foundation has choose this topic, I got many queries. Sir, we are registered valuer. Why the hell we are reading income valuation for income tax purpose? What is the need? I'll tell you the need. When I start the session, then I will tell you the complexities between the Income Tax Act and the Companies Act. There's a fight, there's a conflict between these two provisions. Further, if issue of shares, you will find, oh my God, sir, when the client arrives to us and we are giving a valuation like 2,000 rupees, 1,500 rupees, 3,000 rupees, what are the implications under Income Tax Act for the client? The client will not suffice. He will come back to you, ki, sir, kya kar diya, sir, ye dekho kya ho gaya. So now it's not just ki we, as a valuer, we just see what is going on in Companies Act perspective. When it comes to a valuation, we have to give a complete scenario and a good consultancy to our client, ki what exactly is going to happen for you. Okay. Just a moment, please. Okay, so there's a lot of confusions, and which I will today clear off all of them. Second, well, like all the classes, I start with a question, and today's question is: valuation is more of story or numbers? It is more about the story or about the numbers? What do you think? Debashish ji, you want to try this question?
I think it's a combination of both.
Okay.
But if the numbers are important, the story is also equally important.
If you have to choose one of them,
more of a story.
Exactly.
Yeah, more of a story. That's right.
Yes.
I tend to agree.
Describe what we are valuing.
Yes, exactly.
Rather than simple numbers.
Yeah. See,
yes.
If I give a particular company to value all of you, everybody will come with some different numbers. That is for sure. Why the numbers coming different, and who is correct, who is wrong? There's nobody who is correct, and there's nobody who's wrong. It depends how you have arrived the value. It depends what was the basis of valuation, what was the premise of valuation. What is basis of valuation and premise? What we mean by basis of valuation and premise of valuation? Anybody wants to attempt this question? What we valuers use basis, premise, what is exactly means the basis and the premise? Anybody?
The premise would mean that, okay, under what circumstances the valuation is being done. What are the purpose of the valuation? Probably to what is the purpose?
And basis of valuation?
Basis of valuation could be that what are the documents and what are the basis in the sense it will also lead to what kind of an approach is used, or what are the overall, to some extent, on what are the documents on the basis of which we are doing the value, or what are the it is more pointing towards that.
In a very simple language, if I say you, basis is what value you are arriving to. For example, fair value, valuation for income tax, value for income tax, let's say, or value for liquidation, or liquidated value, or synergical value. What is the value you're deriving is basis of value. In a very simple way, layman language. And premise is what are the assumptions you are taking. For example, I am taking an assumption that this company is going concern. This is my premise. This company is going to cease to exist. This is my premise. There are two companies. One is merging into another. When the existence of other company will be vanished, it will cease to exist. Then that will be a premise for one of the company. So in very basic language, I would say basis is what value you're deriving, what exact value are you going to derive. Are you deriving value for income tax purpose, or Companies Act purpose, or distress value, or synergical value, whatever you want going to derive is the basis of value. And when it comes to presumption, assumptions? It is my assumption, and these are the two fundamental points through which your evaluation is based. One more point which I want to discuss here. I have seen valuations for going concern, and valuers for the convenience or whatever the reason may be, they have valued company on NAV basis, adjusted NAV basis, or I say adjusted NAV basis, it means replacement cost method. So it is correct or not? Can we do it, or should we do it? I'm expecting some answers. You can try, because once you try the answers, I'll discuss. We will discuss. I'll not say I'll give you the answer. It's not a precise answer which I can give, but at least we can discuss and build a concept in your mind. What is going on when we are drafting a valuation report? What should be in my mind?
Please
My question is this, sir. I have seen lot of valuations of a going concern. People have chosen NAV method. NAV means not the book value, carrying value. I mean adjusted NAV method or the replacement cost method. Is it correct to use? Or it is, you say, okay, sometimes I can use it.
It can be used only in case of asset-based companies.
Okay.
And generally, in the case of growth companies, we go by DCF.
Okay, sir. Let's take an example that you have a company where you have a lot of land in your company, and I am coming as an investor. So what would be inside my mind when I'm investing in your company? I should be more focused on buying your asset or getting control of your asset, or I am going to my lucrative points are to earn the cash flows from your company.
Generally, it is the aim of the entrepreneurs to earn profit out of production, not to monetize the asset.
Now you got
profit.
Now you got the point which I am going to discuss. Exactly, this is the reply. See, when we are going for when there is a presumption that the company is going concern, we should avoid adjusted or replacement method. It's very easy, I understand, but we should avoid even if the company is a heavy asset based company, because the investor who is investing in the company is not looking to control the asset. He is investing in the company to earn the cash flows. I agree, there are sometimes मैं उस पे बात भी आऊंगा कैसे उसको निकालना है, but you have to understand why the investor is investing in this company. Is if the intention of the investor is to get the control of the asset, then of course replacement cost method is the best to analyze that. But if the investor is looking forward with a huge vision of earning lot of money from his from the cash flows generated by this company, then why should not we use DCF method and select NAV method? Sir, if my DCF, and please try to understand, if my DCF value is less than NAV replacement value, then it is better ki dhanda band karo, stop the business, sell off your business, start something else. If your cash flows are less, if the present value of the cash flows are less than the value arrived by selling off the assets, it's better to sell the assets. You concur with me or not? You agree with me or not? If the replacement is replacement cost, if I sell off my business, I'm getting more money than what is expected in futures. What is this DCF? It is the present value of the future cash flows, nothing else. So if I'm getting my sweat in the company, blood in the company, and getting less value of my company equity compared to NAV, should we use that or not?
But I think it has got something to do with the nature of business also. Like all infrastructure companies, they're very heavy on assets, but the returns are fairly low. So in such cases, on a very long-term basis, possibly the DCF value, business value will be more.
But
on a
DCF,
particular point of time, the asset value will
but in DCF, you consider perpetuality. Sir, in any business, I tell you, sir, fundamentally, in any business, if the cash flows are less, the company will not exist, sir. Sooner or later, it will liquidate. I'll tell you, sir. And this is the biggest mistake we are doing. Even if a company is asset based, understand why the investor is investing. We need to get in the shoes of the investor and understand why he is investing. If he's investing to gain the control of the company, absolutely go for the replacement cost approach. But if the investor is looking for, getting the profits, I have L&T shares, Larsen Toubro shares. It is a, asset-based company. But my intention is not to acquire the assets of the company. My aim is to get my wealth creation through dividends and, increase in the value of shares. Malab, I am building a concept. Malab, we should not apply this, NAV method. I'll tell you my recent one of my valuation project. I'm doing a valuation project for a company where two government companies have a stake in a particular company. It is a oil supply company, and I cannot give you more information. It's a sensitive information. So the company which I am valuing got a huge land base. And if I go to CCM method, that is company comparable method, I get 10x value of similar peer companies, and I discounted it, and I get 7 or 6x of EBITDA multiple, and then I derive the value. It comes around 48 to 50 rupees. And then I asked them, sir, give me the this land and everything value. They provided me projections also for 25 years, 30 years. Sorry. So I asked them, sir, can you give me the NAV value, the adjusted NAV value from any chartered accountant or someone else? So he gave me 124 rupees. Sir, it is better to stop your dhanda, sale of your assets, than to earn income if I go to CCM method. Will you accept that? Company will accept 30, 40 rupees as CCM valuation through CCM when your net asset value, adjusted net asset value or replacement cost is 124 rupees or 130 rupees or 150 rupees. They will not accept. Sir, then I applied DCF method and I got a value somewhere around, let's take an assumption that the NAV, adjusted NAV is coming 135 rupees. So my DCF came to 142 rupees. And in my valuation report, I have given 100% weightage to DCF and 0% weightage. I have calculated the NAV. Even in the valuation report, I have calculated NAV method also and derived the value, let's say 135 rupees through NAV, and DCF, let's say 142 rupees. And I have given 100% weightage to DCF, not a single percent weightage to the NAV. NAV become my base, sir, to check my DCF. If my DCF is coming below the NAV, it's not acceptable at all. I look again. I said there must be some problem. Then I searched the beta of similar companies, unlevered them, and I got 142 rupees. I said, yes, this is the correct value. So what I'm trying to say, sir, the fundamental basis, for our convenience, for our, कि हाँ चलो कौन समय दे, ठीक है, पैसा नहीं मिल रहा इतना, we apply an NAV method. But if in your valuation report you have written premise is going concern, and you are selling off your asset, you are trying to get the value of the company through selling of all the assets, sir, your presumption is not correct. I'm sorry. Even it is asset-based company, whatever the reason is, sir, if the intention of investor is to earn cash flows through your company, then NAV is not the correct option. Although nobody can challenge your report because international valuation standards gives the option to select one of the three. But as a valuer, I'm telling you, I personally believe not to use the replacement cost method if you have a this premise of going concern. Any doubt till now? And believe me, I also do sometimes when I don't get projections from the company and I have sufficient ground why I should not use projections. If you are not satisfied with the projections, You can ask, you can discuss with your client to change their projections. And if say नहीं हम नहीं दे पाएंगे, sometimes say sir हमारे पास resources नहीं है, आप बना दो. हम कैसे बनाते? हम तो बनाएंगे ही नहीं projections. ठीक है? तो उसके बाद he said okay sir हम नहीं दे पाएंगे projection. If he say like we cannot give you projections, then of course you write in your theory that this is the reason why I'm not using DCF method, although as a going concern the DCF is the most appropriate methodology to be used. You have written the disclaimer. What is report? It is just explanation, nothing else. If you are not satisfied with my report, you can go to another valuer. It's not strict that you have to come to me and the value which I have derived, you have to use that value only. There is a text, there is a story. You agree with my story, well and good. If you're not agree with my story, you can pay me for my hard work, and then you can go to another valuer. Maybe his story, you will like his story, but my story is my story. Any confusion till now? It's very important point. I have seen many reports, when I'm doing peer review or something like that. So I never pointed out ki galat hai. It's not wrong. But as a valuer, as an instinct of a valuer, it's wrong. Agar aap mujhse puche. That is why I always say it is more of story rather than numbers. Even if you want to defend yourself that I want to use NAV and you want to defend, please make a defend statement in your report to defend yourself. Okay, guys, let's move ahead. If anybody have any question, I'm
Ravishji, this is Varun here.
Yes, Varunji.
So for one of my clients, we have specifically chosen NAV because though it is a going concern, the business is based upon the contract with another vendor, which has to be renewed on a year-to-year basis. But in a particular year, if the numbers fall below the numbers which are mentioned in the contract, there is a risk that the contract might not be renewed. So in this case, though at the time of valuation, it seems to be a going concern, but am I not supposed to use the NAV method here?
Very good question, and let's discuss on this, sir. If you are valuing your company as NAV, you itself saying that I will not achieve the target number one. The risk of not achieving the target should be reflected in your cash flows and reflected in your discounted factor. Please understand the discount. What is discounted factor, sir? What is discounting factor? Anybody? What discounting factor says to a valuer? Okay, look, this is me.
The expected rate of return.
Yes, the investor's return. Sir, I am investing. Varunji, I am investing in a company which is too risky. Understand the point. You have a company which has certain terms and conditions, and still I am investing in your company. I am expecting higher rate of return from you as compared to the company which have a stable cash flows or which don't have any terms and conditions. So we can capture that particular risk in your discounting factor. Sir, I'm an investor. I'm going to invest in a company which is highly risky. Cash flows is not, I don't know if you can achieve it or not. So if you're not going to achieve it, this is the reason why my expectations from you is higher.
Sir,
that is why if you go to the bank says, okay, your CIBIL is 750, then the spread rate is so and so. If your CIBIL is 900, 810, then your spread is so and so, and on base of that you get a rate of return. Yes, Varunji, sorry, I interrupted.
But Ravishji, जब कंपनी का अगर वो कॉन्ट्रैक्ट रिन्यू होने वाला ही नहीं है और रिस्क है कंपनी का,
sir again is there a further issue of shares?
No.
Then transfer of shares?
Transfer of shares.
Right now, abhi aap aaye point pe, sir. Transfer of shares is what? Polling.
Not able to hear you.
Raviji, your network is very
Aapka,
poor.
sir, we
We are
lost
not
you for
able
the
to hear
last
you.
10
Okay, okay.
seconds.
Okay.
We lost you for the
So,
last 10 seconds.
See, I told you, get into the head of investor. You get the valuation done. Sir, when we are buying a company, we have in a mind to grab the assets, to get the control of assets. When you have that thinking to get the control of assets, your story changes. Hadn't be there a case of further issue of shares, TCF should be the best way to calculate determine the value of the equity. But now there's a transfer of shares to nahi hai, sir. When there's a transfer of shares, DCF, you can ignore, you can go to NAV method, because most of the time the investor is trying to get the hold of assets. More of cash flows, they are inclined toward the assets also. Very good question, but thank you. Any other question? Anybody? And anybody have a different opinion? Most welcome. Because I'm also a student. I learn daily these things. Any other question, or I'll just jump to my
Raviji,
slides? Huh, sir. Sir, please unmute yourself.
can you
Sir.
please tell us where exactly with which context can we use other methods like market?
Peer. Like I was doing a valuation for a startup company. I don't have any peer. Then I have left with no option than to go with the DCF only. But if I get a company like, let's say, a defense company,
Network is poor.
oh, I'm so sorry.
Network is poor.
I don't know, sir. I have a Airtel 100 unlimited.
Showing a red signal, red or yellow.
Oh,
sometimes.
there must be some problem. Okay. Am I audible to you?
Yes.
Okay. It is beyond my control, sir, internet. So I'm so sorry. You have to bear with that. I'm so sorry.
Then you can
Okay.
you
Sir,
can stop your video.
Sir, see, when we are going, what is CCM, sir? It is nothing. I'll tell you very, okay, valuation is very basic. Sir. Don't complicate it. Very easy, very easy. When the moment you complicate it, it becomes something which, nobody is able to understand. Sir, there are two plots. One Shiva Prasad ji have, one I have, both are adjoined account, adjoining plots. My plot is a corner plot. His plot is next to me. I have sold my plot for 1 crore rupees. Now Gautam sir arrived to Gautam sir approached Shivaji ki I want to buy your plot. And the circle rate is 60 lakh rupees, sir. Shivaji, will you sell your plot at 60 lakh? I know you already know CCM, but for others also, I'm explaining this. Will you sell your plot for 60 lakh rupees? Absolutely no. Why? Sir, it is not the correct. See, market correct itself. The quality of market is market corrects the price itself. Market slashes. You have seen the Adani. Market itself corrects the price. So 1 crore is the value. Sir, will you sell at 1 crore? Gautamji, will you buy the plot for 1 crore from Shivaji?
No, because not
he will say, sir, there are prime location charges. He got two-way roads. He's a corner. He getting air from 2 sides, probably 3 sides. So you will give some discount, right? He said 90. He said okay, right? So what are you doing? You are discounting. You are giving some kind of discount. In the similar way, what we do, sir, we analyze EBITDA margins. Let's say EBITDA margin is 10x. For let's say we have taken 5 or 6 companies or similar companies. We have all the values are available on internet. they will give you EBITDA margin, EV to EBITDA, 10x. Okay, you got a figure. Then you calculate your company EV and multiply with a factor, not with 10x. Then you have to compare. It is your discretion. Look, this company has a market cap lower than the cap which my peer companies have. Look, my company is not listed. Look, my company has more debt as compared to other companies. So my factor will be lower than the 10x. Let us give 8x or 6x. It depends on you. Nobody can challenge that if you have a logic behind it. So you multiply with the EV, you will get EBITDA margin, you will get the value of the equity. So it's nothing like that. If you have peer companies available, sir, if now I should go to India's 113, what India's 113 says? India's 113 says there are three, there is a hierarchy of selection of selection of the method to arrive fair value. Everybody remember that?
Yes.
In India's 113, first it says
level 1, level 2, and level 3.
Level 1 says if you get the exact company, then this is the value. For Reliance, you getting the exact rate. Reliance is listed, you get the Reliance value. It is the value, fair value. Second step, it is the CCM. It says you have similar companies, but your company is slightly different than similar companies, then you can give some discounts. If I get value from that, that is also good value, sir. You can go for CCMs if you have a peer company available, because at least you got some data, sir. You try to understand, sir. देखिए, what is DCF, sir? It is projections. मैं चांद तारे तोड़ लाऊंगा. Every projections you must got is like हम दुनिया बदल देंगे. Revolutionary cash flows are there. Very good growth and everything is there, but it is an impure figure, sir. Projection is impure. Don't you think projections are impure? Nobody is Sanjay of Mahabharata who can see what is going on. So projections is impure, but at least in CCM, something you got to justify your value, sir. It's only the discretion of 10x or 8x or 6x. This is only the assumptions you are taking. But in DCF, you are taking assumption of the cash flows, you are taking assumptions of the beta, you are taking assumptions of market premium, you are taking assumptions of company specific risk, you are taking assumption of discount of lack of marketability. So many assumptions. And when impure cash flows are there, when impure data are there, it's better to take a data which is readily available and in the market. You understood my point, sir? I hope I justified your question. Any question for that, Shivaji?
But I feel that I think a comparable companies method may be not possible for all the companies.
Yes, it's not. I tell you, sir. I tell you.
As comparable companies.
Sir, I tell you example, live example. Sir, I give you live examples. In the same which I was doing for a company, the valuation as per CCM model is coming, let's say 34 rupees or 35 rupees. Just because the company has a huge debt. The peer companies don't have debt. So it was coming 35, 36 rupees, whereas the NAV replacement cost was coming, let's say 135 rupees. So in that case, peer company is not giving me, the CCM is not giving me the correct information. And I have written this in my report. Look, CCM, I have gone through CCM also, but CCM is not giving me the correct value, as the replacement cost is much more higher than the value which is deriving in CCM. So it's better to sell off your business and enjoy the money. Put your money in FD and enjoy the interest, rather than sweating, giving your blood time to the company, which is not even giving you the rate, the returns. So Shivaji, Shiva sir, you have to look out the methods. If the peer is there, so peer gives you actually a base for your valuation at least. If DC is coming more, And if there's a huge difference between the DCF value which you have arrived and the peer and the CCM method, then there's a problem. And you have to identify that problem. Just that. You go with DCF, no problem. But if peer is there and you have find out the value through it, and if there's a huge difference, then there's a problem. Something is wrong with the projections, or with the there must be some debt, huge debt and all. ठीक है सर, आगे बढ़े सर. Okay, let us go to my slide. I hope my slide is visible to you all. Okay. I prefer if you have pen and paper with you, because I will give you some exact rules and sections which you need to go through when you are doing valuation or doing consultancy for your client. Many times we don't have any, we don't have any responsibility toward clients to tell about the income tax effect. But still, as a consultant, good consultant, it's our duty to inform him. Okay. Now, sir, if I broadly classify a transactions between the shares and the company or the individual, there are broadly two kind of transaction. One is issue of shares and other is transfer of shares. Right? When I talk about issue of shares, it is section 62 and section 42 read with rule 12A of the company's bracket share capital and debentures rule 2014, along with section 56 subsection 2 7B read with rule U and rule UA sub rule 2. मतलब सर क्या बोल रहे हो सर? सर मैं क्या बोल रहा हूँ समझिए. Whenever I am doing a valuation for a company in case of issue of shares, further issue of shares, no matter it is a right issue, private placement, or preferential allotment. Okay. When there is an issue of shares, then first I need to check section 62 and section 42 of the Companies Act 2013. Along with that, sir, I also need to check section 56 subsection 2 clause 7B read with rule 11U and 11UA1. I need to go through these two sections and rules. What they say, I'll tell you, and I guarantee you will never forget if you listen me very carefully. I bet, because I repeat so many times that you'll get irritated, but your mind will accept it, and in the hard disk of your mind, it will be छप जाएगा. Okay, this is my problem. I repeat 2 or 3 times, बेशर्मों की तरह, just because I want that it should be copied in your hard disk properly. So section 56 subsection, when in the case of fresh issue, further issue, section 56 subsection 2 will be invoked along with section 62 compliances as well in case of issue of shares. Right? Now in case of transfer of shares, section 56 subsection 2 clause 10C will be applicable, read with rule 11U and 11UA1CB. If you note, section 56 7B पहले आता है, section 56 10 बाद में आएगा, 7 पहले आएगा, बाद में 10 आएगा. Still आप ये देखिए, when there is, if you want to remember 62 56 2 में 11U2 लगेगा. And 56 to 10C में 11UA1 लगेगा. Although section 56 to 7B comes before section 56 10C, it's still when you are going to get the formula it will be 11UA2, which will give the formula for section 56, subsection 2, clause 7B, that is further issue of shares. Whereas 11UA subrule 1CB will give you the formula for section 56, subsection 2, clause 7C, which says transfer of shares or gifts of shares. Please remember that. Don't get confused. Don't get confused. Okay. Okay. Let us move ahead. My question is, when there's a transfer of shares, what is the role of valuer, registered valuer of Companies Act? In case of transfer of shares from one person to another, what is the role of registered valuer under Companies Act? Do we need to issue shares report or not? Company involved है sir कि नहीं है? Anybody wants to attempt this question? Pankaj ji, चाय पी रहे हैं? कॉफी पी रहे हैं? चाय पी रहे हैं सर? चाय पी रहे हैं. Okay. I read your lips. चाय पी रहे हैं. Okay. So what do you think? Registered valuer has any role, or my valuation report will be there when there's a transfer of shares from one person to another? Even if you don't know the answer, Pankaj ji, just guess yes or no. Sir, I cannot, if you unmute yourself.
CA has to value the shares.
As a registered valuer, what is the role of registered valuer under Companies Act? He got some role to play here, or there's no role for him, no scope for him?
No role for registered valuer, na? Where it's a transfer. Issuance में होता है role.
Everybody is okay with Amit sir? Amit sir, hi, how are you?
Very
Long
well, sir,
time.
very well.
बताइए. Please attempt this question, because even if you're wrong, then I'll make you correct. There may be chances I am wrong, you will make me correct. बताइए, Bhattacharya sir, Sunil sir.
I think
Rajiv sir.
he will only value the shares, but he is not one of them, what do you call, obliged to report to the ROC or any other authority.
Sir, as a registered valuer, as Amit sir said, that he has no role to play here. The reason is it is a transfer of a share from one company to another, from one person to another. Company is not involved in any case in this. The person has to inform to the company that, look, delete his name and add my name in your register. I am now shareholder. This is your share certificate of the company, and see my name is there. It is a transaction between the two persons. Company is not at all involved in this transaction. So as a registered valuer, in case of transfer of shares, we don't have any kind of role to play in this transaction. It's just the further issue of shares, or the soft valuation, or the distress value in IBBI, or conversion from CCDs, optionally convertible, preferential allotments. These are our requirements basically of section 192, in case there's a consideration kind. So now let's talk about fresh issue of shares. So there are three kinds in which a company can issue a share. One is right issue, second is private placement, third is preferential allotment. Right issue we all know. Let us come to preferential allotment and private placement. What is the difference between preferential allotment and private placement? Anybody want to attempt this question? बहुत question पूछता हूँ, I'm so sorry. This is my problem, because I know कि कोई ऐसी चीज ना छोड़ दूं मैं जो पसंद में ना आए.
One thing,
Hello. अरे राजीव sir.
Preferential allotment is preferential share which is preference given to shareholder, and private placement is institutional to give particular institutional investment to the given priority in private placement. Sir.
Absolutely correct, sir. In preferential allotment, we give preference to existing shareholders, and in private placement, it's a third party which have nothing to do with the company, and they have no significance role before the allotment to them. Sir, preferential allotment may you require valuation report?
I think not so.
Yes, required.
Yes, it should be.
Definitely.
Yes.
Yes, it's required.
Yes.
Required.
There's a requirement, but आप क्लाइंट को मत बोलिएगा, आपका पैसा खत्म चला जाएगा. What I
Because
do,
if it is, if the issued price is more than the market rate, then the company has to pay
Sir,
the income
sir,
tax.
there is a small, you know, there's a small window through which you can escape from the requirement of valuation in this. What I do sometimes, I know that there are 5 shareholders. Just off the records, I'm telling you. I don't share it with my clients. They'll say, okay, I'll not go with the valuation. This is the perfect way. I know there are 5 shareholders. 3 of them, I want to give them shares. 2 of them, they don't want to take shares. I issue right issue. I float a right issue. And they renounce their right. I will not subscribe. You getting my point? What I'm trying to say, sir?
Sometimes renounce is a
Sir, if everything is set up, you know, if everything is there, then there's a scope. It's little scope that you can escape from the requirement of valuation sometimes. You got my point? The
No,
ishara
sir,
काफी
how- 1 minute, sir. How can, sir? How?
Sir, let's take let's have a Siva Prasad ji. I can see him. Bhattacharya ji, I can see him. Rajiv sir. You 3 are the shareholder of company. Now you decided. You all 3 decided that Shivaji have a huge money in his bank account. Okay, and company needs money. So you said कि sir, you both said sir investment लेकर आओ company में sir, चल नहीं पाएगा. शिवाजी ने कहा ठीक है सर, शिवाजी सर ने कहा ठीक है. तो अभी मैंने क्या किया, आई हैव इशूड राइट इशू ऑफर कर दिया आपको 30%. राजीव जी, यू हैव रिनाउंस योर राइट, आई डोंट वांट टू टेक. अच्छा, व्हेन आई इशूड अ राइट इशू पेपर्स मैंने बनाए, देन आई नीड टू गो फॉर वैल्यूएशन. नो, देयर इज नो रिक्वायरमेंट फॉर अंडर सेक्शन 62(1). देयर इज नो रिक्वायरमेंट फॉर राइट इशू. ठीक है, you have renounced your right. Bhattacharya sir and renounced right. So who got the option? They were Shivaji. Shivaji sir will buy the shares and you can escape from the you know, the compliances. Just I'm giving you food for thought, sir. Right? Okay.
यहाँ सर रवीश जी एक और क्वेश्चन उठता है.
Yes sir.
Suppose the person who is renouncing, now how that renouncement valuation will be done, whether it will impact the income tax also, because you are
Sir,
renouncing your right as per capital gain.
नहीं sir, section 56(2)(7)(b) is very specific. Section when you are taking a renouncement is not that you are getting money from renouncing. It's an activity that I don't want to take. I don't have money. So in that case, when you have not subscribed the amount and you have not transferred your right to Shivaji, then there is no.
I am talking in terms of income tax.
You are talking about section 45
renouncement of right is also
you are talking about section 47, I guess, of the Income Tax Act, where there's a definition of transfer, which includes transfer through renouncement, transfer through there are certain things
by any means.
Yes sir.
Technically, by any means.
Sir, in this, the renouncement is not the renouncement of income tax. In the income tax announcement, we have a land and I'm renouncing my right in the land, or we have I was there in the asset. Right now it's not your asset. When I have floated an option to subscribe and you are not part of that asset already, then you cannot renounce the right, the control on that asset, which is not yet into your control. So transfer renouncement kya hai? When I'm having a control in particular asset, I'm renouncing.
Already in case of renouncement, in case of listed company, renouncement are trading in the market in perfectly legal manner. So that right is also carrying a value. We cannot
Sir,
just say that
I agree. When I renounce on somebody's name, then there's issue. When I renounce, I don't want to, subscribe. I don't want to include my money in this.
Ultimately, when there are only in a private company, when there are only 3 people who has got right, and out of that 1 or 2 or anyone who has renounced his right, it's indirectly gift of your right of renouncement in favor of XY.
Sir, I differ you at this point. Maybe you are right, but in my case, I believe when the asset is not in my control, how can I renounce my right?
My simple point is, sir, why to go in debate with income tax assessment or income tax officer? Get just a valuation report, get the preferential issue. Why to go this hanky-panky of announcing right issue and then?
Sir, the only reason is when you're a consultant and you have a company, then you have to look few things in your mind, and this is one of the window. I'm just telling you. I'm not saying you do it. I'm saying this is a small window. For example,
should I add?
Not about fees, sir.
No.
Not about
so
the
I
fees,
think
sir.
so. I think so. This is what is being definitely done, as you have mentioned, Ravish ji. Sahi hai.
Yes.
With the startup company generally do these type of things because they
Exactly,
are
sir.
bootstrapped. Promoter want to
Sir,
save
I don't want to come
allotment.
into that phase. आपने बिल्कुल clearly बोल दिया. मैं
So
उसको इशारा करने वाला था.
Many a time people come, and this is definitely, if you ask me, technically, although right, you should avoid.
Yes.
Although technically from the company law point of view, because here what the person is doing, the existing shareholder, he is not applying only. So offer is being made to him. He's just declining. He is not doing
exactly. It's not renouncement. It is a declining of the offer. Exactly.
Okay, so that is the way people are using this loophole, you can say, which is currently there.
Yes, Amit ji, I don't want to come on that page, but thank you for. I was avoiding to use that word because मैं कह रहा था इशारा काफी इसीलिए.
Ravi, I want to add one point.
Yes, sir.
In case the renouncement results in any monetary benefit to the renouncer.
No, sir. No.
Then only it will.
Yes. When there's a consideration involved in renouncement,
say rights are traded in the market.
And
so
the rights
had come out with a rights issue.
Yes.
Then rights were available first at a premium.
Correct.
If I sell like that, and if I get any monetary benefit, then only there will be tax effect on me.
I agree with you, sir.
Otherwise,
absolutely,
there is no tax effect.
I agree, sir. Sir, see,
don't sell or don't renounce also. Then it doesn't mean.
Sir, this is a technical word which is used in Companies Act. That is why I have to say renouncement. Else it is declining of the offer basically. Okay. Let us come to section 56. Very good debate. Thank you so much. Section 56(2)(7)(b). Let us read. Where a company, Kamal sir, thank you. Where a company, say what section 56 subsection 2 clause 7b is saying, where a company not being a company in which public are substantially interested. अब इसके बारे में पढ़ेंगे कि what is this, ठीक है, इसको भी भूल जाते हैं. Let's say where a company, इसको भी काट देते हैं. Where a company receives in any previous year from any person being resident of India any consideration for issue of shares that exceeds face value of such shares, the aggregate consideration received for such share as exceeds the fair market value of shares. सर क्या बोल रहे हो, कुछ समझ नहीं. सर मुझे भी समझ में नहीं आया. इसको आसान से समझते हैं in easy form. Sir, what section 56 (2)(7)(b) is saying? It's saying a company can issue shares either at par or at अभी मुझे रोकिएगा मत, मैं जानता हूं तुरंत आपका कुछ आंसर आएगा. at discount, इस पे अभी हम बात करेंगे. at premium. Sir, is there any other way a company or any other value a company can issue shares other than these? At par, that is face value. At discount, below the face value. And at premium. Is there any other way? No. Section 56 subsection 2(7)(b) simply says, it says, pehla, if you are issuing shares at face value. Income tax says I don't have any problem. I don't have any problem. Income tax says. So if a share is issued at face value, further issue in case income tax have no problem, you can issue, income tax will not ask. If you are issuing shares at discount, income tax again have no issues. Income tax says I have particular no issues, you can issue at discount also. The problem is when we issue at premium. When a company issue shares at premium, this is a problem. And before I start to discuss on this problem, let us understand the problem why I have choose this topic. I have done research and then I came to you to discuss on this topic. Sir, as a registered valuer, can we issue shares at discount? If a company is sick company, if a company is sick company and the value is coming below face value, can we issue or no?
Where the debt of a company is
but sir, yes or no?
Converted into
no.
equity in case of a bank.
I just need yes or no. What is your opinion?
No, company law doesn't allow issuance.
No,
of
not under
share
the company's law. Not under the company's
Exactly.
law.
Section 58, I guess. Section 58, I guess, which says that a company cannot issue shares at discount unless these are the conditions, and the conditions are very restrictive. You, as a going concern, you cannot issue, even if in case you have arrived a value which is less than the face value. In your valuation report, you write the face value, since the valuation is below my valuation is below the face value, hence the valuation of equity is 10 rupees or the face value, right? So let us first cross this.
In the case of conversion of debt into equity, then it can be done at a what do you call particular
That actually, then sir, you are comparing the CCD or the the instrument with the your this equity. It is a different case. I'm saying fresh issue of shares. Fresh issue. I understood your point. Fresh issue of shares. So this is absolutely not possible. Sir, this is possible, kya? For a going concern, is this possible?
Yeah, it is possible. It is possible.
For a going concern, sir.
Sir, face value में तो share issue हो सकता है.
Very rare, sir.
Rare. It is very rare.
Very
It's
rare.
rare.
Very
I mean,
rare.
theoretically, it is not ruled out. Theoretically, there is no embargo.
Theoretically, it cannot be ruled out. Yes, absolutely. But very rare, sir. Sir, normal issue to preferential right issues I'm talking about.
Okay, then it is not possible.
Some theoretically it can be possible, sir. Theoretically, although you will not get 10 rupees exact, or you get 11 rupees maybe. Okay. So generally, when we value a share, we 99.9% we will have this case. You agree with me, Debashish sir? We will have this case, and this is a problem wherein our client can face problem in income tax. This is the reason why I have choose this topic. When you are valuing a share, don't get onus or your responsibility. Disclaim it that section 56 subsection 2(7)(b) is applicable on you. You go to your tax consultant, you go to your chartered accountant, and you inquired about it. Don't come after my valuation report when the assessment is done and huge income has been added in your books of accounts, and you have to pay tax on that part. Okay, I was there. When the problem arises when company issue shares. Let me divide it into two parts. There is a totally different mechanism under Income Tax Act, and there's a different mechanism in Companies Act. 11UA2 is different, something very different, which you will not accept as a valuer. I'll tell you what it is. And income tax will not accept your value, but the company has a restriction that it has to use your value. Whereas the income tax even don't recognize your value. I'm writing from past 4 years. Sir, madam, MOF, Ministry of Finance, please add our names also. There's a huge problem. When I'm valuing a share, I need to, give consultancy to my client as well. Look, Section 56 is also there, who don't recognize me. Section 247 recognizes me. Income tax don't recognize me. The value of income tax might be different. The value which I have right is different. Income from other sources will be applicable to you. What is that? Let me tell you. Let's say, as per Companies Act, the registered valuer gave a valuation of 125 rupees. I will apologize for bad handwriting. Please bear with me. And as per Rule 11UA2, it comes to, let's say, 25 rupees. Then you know what will happen? What will happen, sir? 100 rupees per share multiply by number of share issued. This figure shall be added in under income from other sources of company. And company has to pay tax, regular tax on this amount. क्या कह रहे हो सर? सर बता रहे. This is the biggest problem, sir. Don't take the onus on your side. Ki always say when you are going to give a valuation for our private company, you say to go to your tax consultant also and check the hello 10 minute पढ़ा रहा था 6 बजे के बाद. Don't get the onus, you disclose it, you go to your income tax consultant and then you do whatever you want to do and then you come back to me. Okay, we can discuss on the projections and all. Again, ishara kar raha hu. Okay, sir, section 56, subsection 2, clause 7b says, face value at par, no problem at all. Discount, no problem, but problem in Companies Act. This particular page will give you, flash. I will share this slide to you. This page will give you exact slash. I made in my book also, in valuation book, which I have authored. If it is issued at premium and the fair market value is as per Income Tax Act, that is, wo jo 25 rupees tha, sir. वो जो 25 rupees था, ये वाला. If the company has issued shares at this rate, that is FMV as per Income Tax Act, then income tax have no problem. But the problem arises when there is a issue above the fair market value as per income tax. Then the difference between the fair market value and the value on which you have issued the share will be added back under income from other sources, and your company has to pay tax 26% on that. Till now, any problem? Should I move further, or you want to ask some question there? How FMV is calculated, I'll tell you. But till now, do you have any problem? The chartered accountants here, or the tax consultants who do tax consultancy also, there's a capping of 50,000 rupees in 56 section. In most of the section of 56, income from other sources, there's a capping of 50,000 rupees. Remember? Will this cap is applicable here or not? Discretionary or guesses are most welcome in my class.
No 50,000 ka, which meaning 56 to 7 be nothing.
Yes, absolutely. 56 to 7B, there's no cushion of 50,000 rupees. Even 1 rupee excess will be added back to IOS. There's a huge tax complexity, sir. And when we are, giving consultancy to a client, we need to check this also. Or we should disclaim, 2000 value तो हमारी आ रही है, but tax दोगे क्या? Understood my point, sir? Okay. Let's move ahead. Or anybody wants to ask question on it? Any question?
So there's a question. So there's a question on sir, I just wanted a clarification on the shares which are issued for non-cash basis. For example, somebody issued a compulsory convertible preference shares.
I'll come. I have a question.
One thing I want to ask you. Hello, excuse.
You are audible.
If their fair value is 10 rupees, and if the
fair value or face value?
Face value 10 rupees, okay, and fair market is 12 rupees, then 2 rupees will added in income from other sources. You are saying?
No. I am saying, let's say the face value is rupees 10. As per Company Act, the face value, the fair value, I'm using fair value for Companies Act is rupees 12. But as per Income Tax Act, the value is rupees 10.5.
As per income tax.
As per income tax, FMV. Okay, in this scenario, how much you got? You got rupees 12, right, sir?
Yes.
But income tax saying that the fair value is 10.5. Then 1.5 multiplied by the number of share issue shall be added in IOS. I'm saying this.
Okay.
Now the company has a problem. ये तो आपने दिया है सर. वो बेचारा इसी पे करेगा. मजबूरी है सर. अच्छा, one more question यहाँ से पूछते हैं. A company can issue shares below 12 if I have given my valuation report of rupees 12. Can a company issue share at 11 rupees, 11.50?
No.
Yes.
No. How?
Yes.
No.
Yes.
No, as per Companies Act, sir. And also RBFM also doesn't allow it.
Yes.
You cannot stop company for taking 10.5 rupees, first of all. है ना? ठीक है. But the correct the statement is the company should not. The company should not. Even if you file form pass 3, my wife is a company secretary, I don't do ROC work, but she told me once that there's a remark. If a company is issuing shares below the value determined by the registered valuer, there's a remark the company has to write why they are doing it. You cannot stop company. No, haath bandh diya aapne. No, you cannot do, but company should not. I agree with all. Company should not. And there's a reason also. One has to write the reason why they have issued below the value determined by the registered value.
Where is the case of rights issue?
Sir, right issue mein, so there is no requirement of registered value. So the question is,
But when it is issued to the NRIs or the persons abroad,
I'll tell you that. I'll tell you. Okay, I'll cover that. Good question. I'll cover that later. Okay. Now, sir, can a company issue shares above the value determined by the valuer?
No.
Yes.
It can.
Yes.
It can.
They can. They should not below, but they can above. Right? These are the small things which I want to clear here and clear myself also. So I'm
Sir,
I think I'm right. Vijender ji, please go ahead.
Sir, I have a small question and it's very practical from a recent case that I'm doing. So what's happening is, a startup actually raised money from a foreign investor.
A startup.
And they raised,
startup. Just wait. I'll touch that, sir. Don't worry about it. I'll touch that. I'll touch that. Because the moment I start with startup now, everybody will get confused. But I'll touch that, sir. I have in my kitty.
The question is not related to startup. It just that happened to that way. But let me complete the question. I think you will enjoy the question altogether.
Okay.
So what happened was that they raised money. They raised X amount of numbers of shares with this much of price or whatever. And due to foreign exchange difference, they received additional money.
Okay.
Right? And they end up issuing more shares to them. Now the question becomes, can they do that? Secondly, this also violated their share subscription agreement altogether. So just wanted to comment on that.
Very typical, very nice, and very research based question. And I can give you an opinion, but if you want a correct answer, I need to study about it, and I need to check what Indians have to say about, or the accounting standard has to say about the exchange rate difference in case of issue of shares to foreign companies.
And the more interesting part is that the exchange difference comes to around 7 to 8% of the money transacted.
Oh my God!
So it can't be possible like that. So it's basically it's a headache on my head as well for these days, because how do I? Because I am on the other side doing due diligence for the investor on that. So
okay. No, so this type of thing happen very, very often when there are foreign investors.
Very often, yes.
But what you can do, the company, because there is a price consideration, everything mentioned in the share purchase or share subscription agreement. Okay, and everything is denoted in Indian rupee because it's a India share agreement, right? So anything excess can be repatriated back. It's a very simple process.
Repatriated also, and one more thing, sir. The contract, which I don't want to answer right now, but if you leave this question for some time, because I don't want people to get confused. It's a good question. I'll tell you one more thing is there about the contract. See, when you are issuing shares to foreign company, point number one is it should not be below, or it should be always more than the value which you have determined.
Yes.
Point number one.
Point number two takes a declaration also on this.
Yes. Point number two. Okay. If you got higher value because of the exchange and you don't want to return, then simply recognize it as income. You can do it. Please correct me if I'm wrong. Third, the Indian government has no problem. Do Indian government have a problem? I don't think so. Indian government will have any problem. The problem is you are issuing more shares on that more value. Amit sir has logically said, when you valuing the share, it comes to in Indian rupees. That is why we use the denomination is very important in valuation. I see most of the valuation report, valuation valuers don't write the currency we have used to value the equity in Indian rupees. If it is in Indian rupees, it has nothing to do with exchange rate. The foreigner will send accordingly the value accordingly. There may be chances you have valued shares on dollar basis. Is this the point? Have you done that?
No. It's not like that. It's on the Indian rupee only. The only thing that the company still received extra money and they issued more shares. Now that become a problem.
That is a problem.
Yeah, that is a problem.
You should not. Yes.
And on top of it, on the similar instrument like a CCD, compulsory convertible debentures, RBI has a very strict guideline that you have to return even in a 1 rupee additional.
Yes, right? yes, absolutely correct. And this
so in a previous case, that was the case. But now that this company is giving us all sort of reasons and everything, this is allowed and all that.
No.
That is why this fiction came
in. No. See, you have processed all the documents relating to the issue of number of issue to foreigners. Now, since the money has came and you have increasing the the number of shares and all, this is not justified. You should ask them to return the money, or you just book it as a, in your income as per income tax?
Yes. Yes.
Sorry, folks, let's come back. I'm so sorry. Let's discuss again. When you are section 56, further issue, face value, no problem. I said, I repeat many times, I'm so sorry. Second, at the fair market value, which is derived according to Income Tax Act, no problem. There's no addition at all. But in case if the registered valuer has given a value of ₹12, and as per income tax, let's denote with rupees with black point, 10.5, then there is an issue. Then 1.5 multiplied by number of shares will be added in the other source, income from other sources. Right? Everybody is okay with that? I should move ahead.
Yep.
As already I've told you that 50,000 ceiling is not applicable. It's not applicable in section 56 to 7B. ध्यान रखिएगा बहुत ज्यादा. ठीक है? Okay. Now there is a question for two types of companies. Basically, one is the venture capital undertaking from venture capital company or venture capital fund. They are immune from section 56 subsection 2 clause 7B, and the government has a liberty to notify certain persons from immuning them from section 56 subsection 2 clause 7B. So the government has invoked their power. They have invoked their power, and they have come with a notification on 6th February 2018 with file number 173 sub 1/14/2018. Sorry, 19. Sorry, 18. Sorry. This is the file number, circular number, which have been issued. And it says that, look, the startup companies are being immuned from section 56 subsection 2 clause 7B, and all the pending cases, even if it is going, all the pending cases on the startups are being immuned. For example, if the startup company has issued share at ₹12 and the fair market value is 10.5, then 1.5 will not be added to startup companies. Okay, what do you understand by startup company? Another question. What we understand by startup company?
It launches a new product and with a new technology.
DPIT recognized and angel tax application also filed.
Very good.
Yes.
I just want to add here, everybody, that sir, just having a DPIIT registration does not immune startups from section 56 to 7B. Please remember, a company having just DPIIT registration will not be immune or will not be called startup under Income Tax Act. Anybody remember any form which has to be filed?
So Startup India dashboard, there is
Form
a
56.
different dedicated section where you submit this application to Income Tax Department.
Yes, there is a form 40 under section 140, correctly said. Form 2 is there. You have to duly sign and submit form 2. I'll show you what is form 2 in my slide only. Form 2 has to be submitted, duly signed by the company. And if a company has DPIIT plus form 2 submitted, then only you can get immune under section 56 to 7B. Nonetheless, you have to pay the tax.
So I have a small question here. The form 2 has to be submitted to the Income Tax Department separately.
In the DPIIT, sir. DPIIT.
Okay. Right. So this is a single window, right? Single window clearance.
ठीक है सर?
ठीक है, thank you.
आगे चलें सर. Okay. Now you understood what we have read till now. I have a bad habit of revising again and again. Section 56 to 7B is further issue of shares. It says, sir, face value, no problem. Discount value, problem with Companies Act. And premium pay, if premium is equal to FMV, premium plus face value, that is your share value, is equal to FMV as per income tax, no problem. But if the fair value, again I'm using fair value to denote value determined by registered valuer, and fair market value is being denoted for value arrived as per income tax. If the fair value is more than FMV, then the difference shall be added to IOS. But venture cap companies and startup with DPIIT and Form 2 shall be immune. Okay, let us move ahead. We have to go a lot. So, sir, when we talk about section 56 subsection 27B, 56 to 7B, then it talks about FMV, fair market value. And how to derive fair market value is a question. It is solved by the rules. One of the rule is 11UA. Sorry. Another is 11UA2. Okay. So what 11UA is? 11UA defines the terms used in 11UA2 or section 56. It is just a defining rule. It gives the definitions, whereas this gives the complex formula. Very complex. You will say, oh my God, very complex, sir. Very complex formula. Okay, 11UA2. Sir, the complex formula is based on NAV, net asset value. So just a question. It should be just a question from you. What 11UA must be telling? What should be used? The book value, NAV, that means the carrying value, or replacement cost, that is adjusted NAV. Adjusted NAV means you are valuing land. If there's land, you value the land at market value. If there's jewelry, artistic work, any other shares in the company, then you value the share of that company, added back the premium, and then you add the non-appreciable assets minus the book value of liability, and you get, this is replacement cost. So what do you think for issue of shares? Income tax must have suggested
half of both.
This one or this one. You have to choose one, A or B. What do you think? Prudent basis. Book
So
value
they
of
must have
NAV.
done book value.
Book value.
Replacement cost.
मेगा जी replacement cost होना चाहिए क्यों? Because it gives the correct picture. At least it gives some correct picture or not?
Yes.
क्यों? When there is an issue of shares and you are giving at book value NAV. There's a land, so much land and all. You're giving book value. It should be NAV or not? What do you think?
That will not give the correct picture.
Book value, na?
Yeah.
See, you are right. But 11UA2, I said, very complex formula. It basically talks about book value of NAV. Charuji, it talks about book value of NAV.
Okay.
Okay. I was just cracking a joke, very complex formula. It's nothing but book value. When there's an issue of shares, it is calculated. When the issue of shares, it is calculated by unquoted shares. Fair market value of unquoted shares is for issue. It is nothing but book value per share. Now tell me, as a valuer, will you value a share where there's a company, there's a land in it, there's a intercompany holdings? You will give a book value or not? Or you give adjusted replacement cost or adjusted NAV? Of course, adjusted NAV. How can we give book value? And there's always a difference will be there. There will always be a difference. We will not give for issue of share 62(1)(c), 1(b) as a book value. Of course, no, not at all. Nobody will. But income tax has accepted book value method. There will be always a problem. This is the reason I have chosen this topic, to clear out what has to be done, what needs to be done.
So problem is secondary as well. The second part of this.
Harsh, भेज दिया भाई. Okay. Sorry, I'm just sending a OTP. Okay. Sir, what I'm trying to say is saying book value, Madam Megha ma'am. Digest हो रहा है? नहीं हो रहा है?
But sir, this was done to create a problem for a black money conversion for a newly incorporated companies. Once a company has passed over a couple of years, the book value system does not work at all.
Yes.
So the intent of this section was not to value.
Intent is okay. Intent is, but sir, what I'm trying to say, that your value, registered valuer who will value a share will be never be book value per share.
So if a company is newly created, then the book value can also be.
Sir, even if a company is newly incorporated and somebody is going to invest in the company, there's a cash flow, sir.
Yes, sir. So
I am investing in a company with the view to get profits, and if there's a profit engaged in the company, then the DCF comes to play. You cannot say ki if the company, newly company, I'm giving you 10 rupees. No.
No. So the only challenge is that there's a catch here. So what happens is when our future equity is concerned, CCD, CCPS, and investor investing. So in that case, if a new company is incorporated less than 6 months ago who has not completed the first financial year, so a lot of times even the RBI FEMA also takes up the book value. They say it's a cost catch-up, nothing is there on the
many times I use also this formula. But I'm telling you, as a prudent valuer, as a what my mind says. If I say what your heart says, what your heart says, your heart says. No, your heart says no, man. This is not the correct way to value, because the intent of investor is to earn the money.
Sir, heart creates problem. No, second part of the section creates the problem.
Just I'm trying to touch.
When there is a statutory provision, there is no question of heart or mind. We have to follow. We have to just follow the rule of the law of the land.
Sir, the statute does not say that you have to issue at 10 rupees. It says you have to get the fair value.
Ravish, that is to supplement the vision with this comment or videos.
Sorry,
business
fair value is defined by two ways.
Sorry, sir.
So biggest oxymoron is the word book value and fair value. Because the fair value cannot be in book value, because the book value is always historical cost method. And that is one of the oxymoron here, that you have to calculate fair value based upon book value. So it's a joke. I mean,
how can you say fair market value when it is a book value? Correct, absolutely. Fair market value. It will fetch in the fair market. Book value, nobody was going to purchase.
Because book value is historical cost, sir. It is not
a carrying value. It is a carrying value. And to address Sushil sir, the company, the act says to value fair value, to get the fair value. And if even the company is 6 months old, the fair value in my eye is the cash flows, which will determine the fair value. But we don't have any option. You have to do it. We sometimes we could not follow our hearts. What I'm trying to say with that word, sir.
Sir, when it comes to taxation and the modern legislation, the logic has already gone into the Bay of Bengal or Pacific Ocean. None of the laws, most of the laws today is devoid of any logic. So those, laws we learn in, rule
Very,
of law,
very true, very
all
true.
those things has gone for the toss.
Very,
If there
very
is
true.
statutory provision, we have no option just to follow.
Very true. TDS, there's a mockery of TDS. Now TDS is collected not at source, it is collected on the receipt. This is one of the biggest, example of what you are saying. You're correct. Let's move ahead. So what 56, देखिए, why I'm again repeating it so that it's come to your mind. कि issue of shares में book value लेते हैं for the formula. The formula is book value. इतना discussion करके what I'm trying to get into your hard disk is issue of shares is linked with a book value. I have seen lot of reports of 11U. I'm telling you, sir, I have seen lot of reports on 11UA2, that is issue of shares under Income Tax Act. They have used adjusted NAV. This is the reason I'm telling you. Why I'm repeating it again and again. We need to check the law, as Sushil sir said. It's a law. It's a law. You have to follow it. There's no logic still. The law is law. So, and who can value this? Who is the person who will value this? Any idea? If I come to you, anybody, sir, the law is silent. Even the registered valuer can do it. Even the accountant can do it.
Yes.
Even the directors can do it. The law is silent, sir.
So on the book value method only, right?
Yes,
Not on the.
Yes, book value. Abhi 11-2A mein usme nahi ja rahe, book value. For the book value, there's an opportunity for all the registered valuers. If the client comes, okay, I can do, but for book value, you can take your report and you can say, okay, this is the value. Even he's a not chartered accountant, he can do for 11U8 subsection sub rule 2. Sorry. Okay.
No, but non-chartered accountant cannot do so. Because I have a slightly different opinion.
Even accountant can do. There's a written accountant.
So my opinion is that this says done by an accountant. An accountant definition is under section 271B is a person who is qualified chartered accountant.
Sir, if you go to law is silent, sir. If you go to 11U8 1BC, there is specifically written chartered accountants. But 11UA2 is silent. Just go through again, sir. We can discuss after the class.
Okay.
This thing is open for everybody. And we had a long discussion with my co-author on this, and we come to a conclusion. Yes, everybody can do it. Arrested value can do it. And we have taken, views of tax experts also in that. When we are writing it, we have to be substantiated with the facts, and we got affirmative in that. Okay, so now the second option with the company is to go with DCF method. And DCF, who will do the DCF? Merchant banker. Again, a problem, sir. Merchant banker is giving a different value. I am giving a different value. What will happen? If there's a difference, it will be added. I am writing again and again.
There's another challenge here. The word says merchant banker. It does not specify which category of merchant banker.
सर शायद 11U में आप जाएंगे जो यहाँ पर डेफिनेशंस की बात की, वहां पर क्लास 1 मर्चेंट बैंकर की बात कर रहा है सर. 11U में डेफिनेशन सेक्शन में. शायद कैटेगरी 1 लिखा है. Okay. So
second challenge comes that it also uses DCF, whereas in a comparable transaction market, the fair value comes out to be the multiple value.
Now the challenge is RV has used one adjusted NAV. RV has used CCM method. RV has used DCF method. In that case, company has no option. They have to go with MB. In this case also, no option. MB, in this case also, no option. MB for income tax. And this is for Companies Act. DCF, DCF, DCF. सर हमारे और आपकी वैल्यूएशन मैच नहीं करती है, एमबी की कैसे मैच करेगी?
Sir, on very interesting topic. There is a lot of complexities coming forward as well.
I have no answer for this question. कि भाई हमारी और आपकी अंडरस्टैंडिंग मैच करते हुए वैल्यू मैच नहीं कर रही है. Sir, lot of people called me कि why this topic, sir? We are not, what the hell you are teaching? We are not interested in returning income tax valuation. But this is the very complex issue which needs to be addressed. And we need to guide our clients, especially who are not our permanent client. Or abhi I'll tell you, very interesting issue. I am doing the valuation for a company where I told you the two other companies, government companies, are having, this hold on that company. I have asked them to take a legal opinion from your tax consultant that section 56 subsection 2(7)(b) will not be applicable. I don't take onus, absolutely no onus. If my valuation comes and as per income tax there's a huge difference, I'll not take the onus. They will charge me, they will go to NCLT. Who will suffer that? Just for 1.5 to 3 lakh rupees, I'm not going to face that problem. You understood my point? So I asked them, sir, you take the, this thing, opinion. One thing was left. Just I got remembered when I'm saying that. Sir, who are the companies on which section 56 subsection 2(7)(b) is not applicable? One is a venture capital, two is the startup, and third, the company where public are substantially interested. It's a section 56(7)(b) saying where a company not being a company in which public are substantially interested. So let us read what is a company, who are the company where company are substantially interested. We need to know about this, right? So these are the company in which public are substantially interested. Section 2 subsection 18 of the income tax says a government company where the stake is with RBI or government, central government, state government, Nidhi company, section 8 company, 50% of the shareholders are cooperative society, listed company. These are the company where it will not be applicable, right? So let us take an example. There's a company A. In this company, there's a company A. See, we are reading, sir, section 56 subsection 7(b). We have taken 1.5 hours, and we are not even, done with section 56. So huge impact is there, and we need to understand even very small understanding there.
Department is taking years to come out of it, sir. We can't cover that section in one class.
So let's take there are two companies X and Y. This company has 50% hold by central government. This company holds 51% by state government. And this company hold, let's say, 49%, and this company also hold 49%. And 2% is held by other people. What will be the fate of this company? It will be a company publicly interested company or not?
No.
Yes.
No.
Yes, sir. More than 50% holding by a central government or state government. Or
I will keep my silence here because already I've asked, legal opinion on that. But I believe that it will be substantially interested company. I believe because one of the points says, but I still am saying I'm not sure about it. I believe shares, just like I believe God. I have never seen him. I believe in the similar way I believe, I don't trust. No, you trust when you have seen it something. I believe that last point, F, shares not less than 50% of the voting held by government or corporation established by state, central, province act or subsidiary of such company. So I think it will not be applicable, but still it I have asked legal opinion because
So
I don't want
it,
to.
Or on top of it, there's another complexity here. If the 51% shareholding comes
Yes.
out of preference shares or non-voting power shares, then also it becomes
Yes.
not public interest.
Yes,
So
not
that
public interest.
it's not only about the shareholding, it's also about the
Control.
shares that represent the voting power.
Voting, correct, correct. You have to see each share carrying a voting right or not. You have to see. I have seen that. I have especially inquired about this very minute point, and I have especially Vijendraji inquired from the company that each shares has a voting right or not. If have a voting right, then my F point is there, and it is going to eligible for publicly interested. And I think section 56(7)(b) is not applicable. Still, I don't want to burn my hands in the fire.
On top of it, preferential voting right is also there. No? That is also another
voting. We need to understand, sir, when we are doing valuation, we need to not to aloof just not just concentrate on companies at also only. There's other acts which we need to take care of. FEMA, in case of FEMA also, I'll tell you later the complexities of FEMA. Okay, so now the point come. Another question, sir, kitne question पूछे? Sir, book value निकालनी थी. As per section 56(7)(b), it says book value of share. What should be the date of balance sheet? एग्जाम्पल देता हूँ, क्वेश्चन पूछता हूँ. सर आज है 24th, ठीक है. प्रोविजनल बैलेंस शीट फॉर 31/23 इज अवेलेबल. Audited balance sheet for 31st March 22 is also available. What you will take? What do you think should be?
Audited balance sheet.
But what do you think it should be? One is saying audited balance sheet. So you will discard this. Okay. Shivaji has discarded this. Another view? Mega madam?
So audited balance sheet should be in the past 6 months or so, no?
No, yes or no? Which one? Which one you take?
So
as per income tax, it need to be audited, which has been approved by in the AGM.
Amit sir said this one.
Yeah, based on the law. Okay, based on the law.
Yes. Sir, now we have to move to rule 11U. I told you, the definition part. What 11U has to say? 11U has to say the balance sheet of such company as drawn up on valuation date. The provisional, rukiye, which has been audited by the auditor of the company appointed under section 224 of the Companies Act 1956 or 139 of 2013. Sir, iska matlab the statutory auditor, not the normal auditor. It should be the audited by statutory auditor. So, uske aage padhte hain, and where the balance sheet is not available on the valuation date or not drawn up, the balance sheet drawn up as on immediate preceding valuation date, which has been approved and adopted in annual general meeting of shareholders of the company. Now, sir, which will you take? This one or this one?
22, sir.
Yes. As a valuer, registered valuer, will you take this value? This?
Ideally, no.
Another problem, sir. Another issue. And Amit sir one more issue, and Shivaji and Sushil sir is also there, very particular with act. I just had interaction with 2 or 3. I understood he's very particular with the between the lines. Rajiv sir, Gautam sir. Sir, can I take this if it is approved in EGM?
No.
Yeah,
It's
unless
annual
it is
general meeting.
audited by the auditors.
Provided it is
How
audited,
can
well,
the shareholders
Sir,
approve it?
I am little bit confused because if I read between the lines, it says annual general meeting.
Annual
It is
general
not
meeting.
saying extraordinary general meeting. It's not saying. But extraordinary general meeting is it has a color of AGM on. So
if it is audited by a statutory auditor and then it is approved by AGM, then
I agree, sir, with you. I'm just saying, if you go between the lines, they have not said general meeting. They have especially written AGM. What is the purpose? Don't know.
There are a lot of discrepancy in drafting of the rules, including the accountant which you know referred earlier.
Yeah, I agree.
And even, sir, you are issuing shares now and you're comparing a reserves, book value, not even the market value, reserve 1 year old. What the hell is this?
And that's another issue is that date of valuation which they are referring to. So annual general meeting, only that year-end accounts are being approved.
Absolutely.
Yeah,
absolutely.
not
Yes.
the in between.
Yes,
Not the
that is why I said
in-between figures.
EGM. That is why I said EGM. Let's say 6 months balance sheet is there and they are audited by the statutory auditor and they have they done EGM and then adopted it. And look, they can do. The word EGM is not there. If you read between the lines, I think although they have used on the valuation date, it is drawn up. So I think if it is approved in EGM, I can take. My view is this. Akhil ji, hello, how are you? Akhil ji has joined. Okay. Right. Let's move ahead. In fixed, when you are doing book value valuation, then please do exclude the TDS. Do exclude the TDS, TCS, advanced tax minus refund, fictitious assets, for example, unamortized deferred expenditure, even the DTA. If it is, if you think it will not, fetch you amount, then you have to do it. From liabilities, you exclude the dividend which is set apart, reserve and surplus, provision for tax, other provisions to meet liabilities, and all. You have to exclude it. There's a list of things which, when you are doing valuation for issue of shares under income tax act 11UA2, please refer to 11U also. Don't just go with 11UA2 only. 11U is also very important and we need to take care of it. Okay. Now there's a fight between income tax and companies that we have already discussed. There's a small slide that right issue at par, no problem in income tax, and the Companies Act at discount. There's no problem with income tax, but Companies Act. So my view is, when there's a private company, if there's a private company and they're going to right issue, they should go at par only. Don't get yourself complicated. Just issue at par. You will not face any consequences in difference between the income tax valuer and the valuer, registered valuer. Okay. So when there's a right issue, go with face value. You will get that window out from valuing or compliance with Companies Act. That is the reason why I first said, sir, Sushil sir, ki sometimes you have to look for the whole, and if there's a chance that you can get out from the valuation of the preferential allotment, if you get out from one section, at least you can save your skin with another one. For example, if there's a preferential allotment and I choose to go through right issue to have them renounce their right, third as buy another, all the shares. Shivaji sir, a lot of money have bought all the shares. So it will decrease the complications, sir, to some extent. This was the only logic which I want to touch there, and startups were doing also, as Amit sir said.
But we'll be losing our business.
That is true, sir. But this, just keep it in mind. I agree with your point, and I don't leave any, any assignment on that basis. Ki my valuation will, create a little bit complexity with the company. Let it be. Complexities is good for the professionals. We are there to help our clients there. Okay, now let us come to transfer of shares. As I already told, Company Act 2013 has nothing to do with the transfer of shares or the gift of equity shares. It is section 56 subsection 2 clause 10C and 11U read with 11UA 1CB and section 50CA of the Income Tax Act. Quickly, I will make you understand what section 56 to 10C says. If there's a transfer there can be without consideration. Transfer there can be without consideration. Transfer with consideration. But in consideration, there might be two cases, that consideration is less than FMV. Again, FMV is for income tax purpose. Consideration above FMV and consideration at FMV. सर यही हो सकता है, इसके अलावा कुछ हो सकता है?
नहीं.
Okay. Let us now concentrate on this only. Let us take consideration below FMV. This means, let's say in our previous example, we have taken the rupees 10.5 was the FMV as per Income Tax Act. And Mr. Rajiv sir has transferred me shares because he is very close to me. He said, Ravish, you are my dear junior, so I can give you shares at 3 rupees only. I have bought shares whose FMV is 10.5, 10 rupees 50 paisa, and I have purchased the shares at 3 rupees from Rajiv sir. What will happen? 7 rupees is my profit. I have purchased. You will argue me, sir, how can somebody recognize his profits when he has not sold his product? But income tax says, section 50 says, if anybody has purchased shares below FMV, then the difference between the FMV and the purchase cost shall be added under income from other sources. Okay, sir. 7 rupees per share will be added in income from other sources. And also, and abhi kahani khatam nahi hui, and it says ki cap gain, for the purpose of cap gain, the consideration value shall not be 3 rupees, it shall be 10.5 rupees. There are double taxation. Section 50CA is there. Section 50C is there. It says if consideration value is less than, if the consideration value is actually the less than the fair market value, then for the purpose of calculating capital gain, FMV will be done. So in this case, the buyer and the seller both will be taxed on 7 rupees. Additional tax on 7 rupees. Okay. Let us take an example. Another example. If the consideration is 0, if the consideration is 0, what will happen? 10 rupees 50 paisa will be added to buyer under income from other sources, and 10 rupees 50 paisa shall be the consideration value. I'm so sorry, your urgent call is coming. Just okay, sorry. So 10.5 shall be considered. Okay. Yeah. Now, thing is, if the value is 10.5, then what will happen? Nothing will happen. No no income from other sources will be added, right? So the problem arises when there's a no consideration or consideration is less than the fair market value. Then section 56 subsection 2 clause 7 will be invoked and will be added to buyer and seller both. Correct? Any question in that? Any question with that? Anybody has any question with that? Okay. One more thing. If the transfer or the gift is made to ऊपर नीचे दाएं बाएं, my parents, grandparents, my spouse, my brother and sisters, and my children's, then this section is not applicable. We all know that it's not applicable. Another point, let's take Rajiv sir has gifted me rupees 10.5 shares multiplied by 500, and I have given 3 rupees in this respect. Then the total profit which arrives is, इसको 5000 कर देते हैं. The total profit which arrived, this was the FMV, and Rajiv sir has taken just 3 rupees per share. This is the consideration which has been given. So 7 rupees is my profit, buyer's profit, and if we multiply with the number of shares, it comes to 35,000 rupees. This 35,000 is below 50,000. Hence, I will get a cushion of 50,000 here, and it will not be taxed. But in case it would be 50,000 shares, then 3,50,000 will be added. So 50,000 rupees share value cushion is given in this particular case. Any question in that, or should I move ahead? Anybody? This is easy, I guess. This is one page slide. It gives you entire section 5610C applicability. I will share my slide to you. Whenever you want to refer, it will be applicable or not, what are the complications, just see this particular slide, you will get the answer. In the similar way, I have made for section 56(7)B also. Okay. Now for computing, now the income tax has given option to calculate FMV. Now how the FMV for transfer of shares shall be taken place? In case of transfer of shares, what shall be the FMV? If then FMV shall be NAV, that is book value NAV, or it shall be adjusted NAV. क्या होगी sir? What do you think in this case? How FMV will be determined in this case? In transfer of shares, how FMV should be determined? ऐसे ही vague guesses. Megha madam?
Adjusted NAV.
Adjusted. Correct. So in this case, in the case of transfer of shares, adjusted NAV will be there. What is adjusted NAV? Adjusted NAV is the market value of
party ko
appreciable assets. It is the
स्कैन करके जो पेजेस 10-12 जिसमें ईमेल आईडी आ रहा,
it is the fair market value of appreciable asset. What are appreciable asset? Land, land is there, jewelry is there, artistic work is there, the company is holding securities of another company. These are appreciable assets plus book value of rest of the asset less liabilities. So whatever you get, it is the adjusted NAV. Now another question comes to my mind just now. Sir, there is a land and the market value of land is 2 crore rupees, whereas the stamp value is 1 crore. So for the purpose of calculating this FMV, we will take 2 crores or 1 crores. Just a big guesses.
1 crore. 1 crore.
Everybody is okay?
1 crore.
Yes, 1 crore we will take because 11U जो define कर रहा है, it says 11U821 में ही लिखा हुआ है. It says that the value adopted or assessed or assessable by any authority of government or for the purpose of calculating stamp. So it would be market value of jewelry, market value of shares which are your company's holding, market value of artistic work, stamp value of land plus book value of other asset less book value of outside liability. You will get adjusted NAV. So again, for issue, you have to go with book value, whereas for the purpose of transfer, you have to go with adjusted NAV. And what should be the date of balance sheet? There's a question. What should be the date of balance sheet? Let us try to answer. For the Indian companies, it shall be valued by. It should be the balance sheet drawn up on valuation date, which has been audited by auditor of the company, appointed under laws relating to company in force. It's not saying statutory auditor. It's saying the company, the auditor appointed by the company under the law of Company Act. In Company Act, if there is any law which is saying you appoint the auditor 139 ke alawa, so you can go with that also. And it's not saying adopted under AGM, adopted in AGM. It's not saying for this purpose. So we need to take care of that, sir. Okay. Any question till now, sir? I'll be happy to answer, or else we move ahead.
What will the valuation date in this?
Valuation date will the date of transfer of shares. Okay, any question or move ahead?
Suppose in the current scenario, transfer is in the month of June 2023.
Right,
and,
sir.
and last available balance sheet is 31st/3/2022.
Right, sir.
The available balance sheet. And
Audited available balance sheet, sir.
audited available balance sheet. Now we are insisting to the client to arrange the audited balances of 31st/3/2023, which is next to impossible. But client suggested that they are ready to provide the provisional balance sheet duly certified by the auditor. Is it enough?
Sir, audited by auditor. Audited by auditor.
And approved.
I audited, not approved, audited by a auditor.
Thank you.
Sir, there is another technical point here. Suppose as a shareholder, I have submitted the share for transfer today, or suppose on 31st of March, and the company has taken it on board meeting on 15th of April. So which date will be treated as a transfer date?
Transfer of shares, company will not take any cognizance that, I guess. There are chances. You're right. There are chances.
Same date में तो सर board meeting call करके transfer नहीं होता है technically.
नहीं, you are right. There are some cases where AOA में लिखा रहता है कि before transferring of shares to any other company, you have to go with the board and take permission.
Yes.
In that case, yes, I think again the consideration date, the date on which consideration has been received will be the valuation date for the purpose in these kind of circumstances.
This can be dicey also. Valuation consideration can be received in advance also after 6 months also, as per terms of agreement. Suppose I've sold the shares and the money will be received after 1 year.
I agree, sir. If in that case, the valuation date will be the date on which board will sit and decide कि we should allow for transfer or not.
So in that case, technically, sir, on the same date I am transferring, I have to draw up my balance sheet, I have get it audited, I have get it approved, and then transfer. So it is a really pathetic situation.
This is why
this is a law.
This is why I take last audited available financial year balance sheet.
That is the best thing to do.
I tell you 3 or 4 days back, one of my friend called me. He's CA. He said, "Sir, valuation करनी है." मैंने कहा कर देंगे. उसने कहा transfer of shares है. मैंने कहा भाई 22 की balance sheet ले आओ. उसने कहा sir, there will be a huge difference in 22 and 23. We bought a land in 23.
Yes, everything changes.
So, we have bought a land in 23.
In one of the case, sir, I think it was in a tribunal somewhere. They have, AO has deferred in the word accountant and auditor, and tribunal held that auditor cannot be held accountant because auditor is an auditor. So it has to be outside that auditor, some other accountant. So that is also one issue.
You are right. There are issues. There are a lot of issues. That is why I have taken this particular topic. Let's understand and chunk our minds and form some opinion on that.
But every time
I'll tell you, sir. I'll tell you, Sushil, sir.
Valuation as per Income Tax Act by any speaker, any author, you will find n number of different points comes up every time.
I have little leverage. I have little leverage there because this Girish Ahuja ji was article of my principal, and I have done my articleship under the KK Mohindra Saab, who was the principal of Girish Ahuja ji also. So I have little liberty to call him sir ye to एक relationship है हमारा उनके साथ, तो I get little benefit out of it कि हम उनसे कभी पूछ लेते हैं ऐसी problems. But yes, there's a lot of problem, and I'll tell you in this recent case, Sushil ji, one of my friend 4 or 5 days back, he called me कि transfer करना है. I said 22 की balance sheet तो भैया 22 की क्या चाहिए? Why you need 22? There are land we have purchased. I said, I'm sorry, you read 11U. He called me again. He said, okay, we are preparing audited financial statements. We will audit our company before valuation. So they are doing it.
Sir, हर बार आप पढ़ेंगे एक नया evolution मिलेगा.
Absolutely. So this is the beauty of interpretation, sir.
Yes.
And it is the beauty of Indian laws also. Okay. So if in case of transfer of shares by of quoted equity, so if it is the transaction is happening in stock exchange, then of course the very rate on which transaction has been taken place will be the fair market value as per Income Tax Act. But in case there is a off market transaction, can anybody tell me what is off market transaction? I have a Reliance share and I have done a off market.
Private deal.
Private deal kar liya. There's a share of rupees 11 Elora or something like that, which is trading at 11 rupees. And from past 10 years, nobody has sold his share because the fair value of that share is 6 lakh rupees. You just try to search Elora or something like that name, 11 rupees, and nobody has traded in last 10 years on exchange. And if you see off market transactions, it happened with consideration of 6 lakh rupees, 8 lakh rupees per share, like that. So off market transaction you can do through your depository participant, or if you go to your CDSL or NSDL login, you can also transfer shares to that to the person who is purchasing shares from you directly. So these are the off market transaction where you don't go through stock exchanges. So in that case, when a transaction is happening on off market kind of transaction, then the lower price of such share or securities on recognized stock exchange, right? So the lower price shall be the FMV for that purpose. And in case it is not a frequently traded share, then last available lowest traded last day में जो हुआ था उसका transaction, जो उसका transaction हुआ उसका भी सबसे lowest point. For example, अगर I have sold some share and it was last traded on 13th of June, then 13th of June पे the lowest price shall be the fair market value in case of off market transactions.
Then suppose there is a significant difference. Suppose 5 साल पहले last trading हुआ है, it's not frequently traded, उस वक्त 10 रुपए में trade हुआ है, आज उसका fair market value 500 rupees है.
So
no shareholder would like to sell below 500 rupees.
Right.
So in that case, can he get it valued to registered valuer and can treat that, or did you have to again pay the difference as that कच्चा में लेना पड़ेगा sir, indirectly तो ये बात होगी.
Sir, the law is saying correct. Law is saying. और उसमें सर फिर 50C देखना पड़ेगा एक बार. जब आप जो सेल कर रहा है उसके लिए कंसिडरेशन क्या होगी, उसके लिए लिखा है यू कैन नॉट सेल बिलो द फेयर मार्केट वैल्यू. व्हाट इज फेयर मार्केट वैल्यू? इट अगेन सेज जाओ 11 UA. So very complex thing sir, मतलब it's not easy. See, we have already taken 2 hours to just read 2 sections to understand the complexity of 2 sections. Deliberately I have added one very small topic, that is how to draft good valuation report. I know this topic will take 3 hours, and if I say I will take 3 hours for reading section 56, 7 and 10, then you will not, the viewers, the listeners will not subscribe for that, for my this deliberation.
Sir, your second topic is already subsumed in this topic. If you know the intricity of valuation of income tax, then you can always write a good valuation report for that.
Correct. Thank you. Sir, there are few issues which need to be addressed. Issue number 1, what if there is an issue of preferential shares or any other security other than equity? Will section 56(7)(b) is applicable or not? Sir, we have read 11U. 11U talks about equity, valuation of equity. लिखा था unquoted equity is equal to book value. But what will be the fate of preferential shares? Will section 56(7)(b) is applicable or not? General opinion and
No, sir, it will not
guesses is most welcome. Astha madam, any guess?
It will be applicable.
Okay, let us see why it is applicable. Sir, if you go to section 56 subsection 7B, it says
will be applicable.
It talks about securities, not just, I'll tell you, it talks about securities, not just equity shares. I'll tell you how. See, 11UA1C says the fair market value of unquoted shares and securities other than equity shares in a company shall be estimated at a price that would fetch if sold to open market. They have not given any formula, sir. They have just said कि other than equity, unquoted shares and other securities that will fetch to open market. Equity का तो formula दे दिया. They have given equity formula, how to derive value for equity purpose, but they have left open in the case of other than equity. We will read किसका क्या होगा fate, but I'm just telling you that in case of preferential shares, in case of debentures also, other than security like share warrants, we have to do valuation and taking in mind section 56(7)(b). Okay, what if there is an issue of equity share by company other than cash? For example, technical know-how, the goodwill of a person is coming with goodwill or technical know-how, and you are giving shares to him. Will section 56(7)(b) is applicable or not? मेगा जी?
Yes, applicable.
सुरेंद्र सर से पूछे. सुरेंद्र सर बताइए, हम लोग बिल्कुल एक ऐसी सुरेंद्र सर से पूछ सकते. सुरेंद्र सर क्या बताइए, वैल्यूएशन की जरूरत पड़ेगी अगर कैश और कंसिडरेशन कैश नहीं मिल रहा है तो वैल्यूएशन तब भी जरूरत पड़ेगी. आप इशू कर रहे हैं शेयर एज ए जनरल पर्सन, ऐसी ही मजाक में बात कर रहे हैं. आपकी कंपनी है, मेरे को मेरी कोई गुडविल है, टेक्निकल नो हाउ है, मैं कहता हूं मेरे को आप शेयर दे रहे हो पार्टर सिस्टम में कि आ जाओ मेरे पास, मैं तुम्हें शेयर दूंगा, तो वैल्यूएशन होनी चाहिए कि नहीं होनी चाहिए?
होनी चाहिए.
हाँ, बस देखिए बिल्कुल सही जवाब यहाँ भी होगी. सो वैल्यूएशन इज नथिंग बट इट इज जस्ट लाइक you use a common sense. Issue number 3, nobody has laughed. I think that I tried to.
What basis will be value? I mean, if it's not in terms of cash or
Nothing, book value, ma'am. When it comes to valuation of shares, 56(7)(b, it said book value or DCF, nothing. I tried to be a little bit, jolly with the participant. Nobody has laughed when I asked this Suren sir. I'm sorry, it is a bad, I have to say bad efforts to make everyone laugh. Very bad efforts. Okay. Question number 3, what if shares are issued above the value determined by registered valuer SFA?
Sir, I'm interrupting. There is another question comes into in the case of issue 2. That consideration of intangible has to be valued also, or anything other than cash. If you are receiving, then that has to be valued also to calculate the difference, if any.
Perfectly right. Perfectly right. I agree with you. Yes. I left that part. Thank you for including that point. Okay. Now, what if I have already discussed point number 3, that company can issue shares above the value determined by the RV. It's not a big problem, but you should not go below the value determined by the RV. Question number 4, in case of issue of shares to non-resident, in case of issue of non-resident by company, share issue or a non-resident को, from whom we require report. Example question पूछ रहा हूँ, आपको example दे रहा हूँ. My company is issuing shares to Peter, and Peter is residing in Canada. Canada
merchant banker.
So how many valuation reports?
CA and the merchant banker. Or merchant.
For see, you require 2 valuation reports. One is for Companies Act, because Companies Act says further issue of shares, you have to go with valuation report of RV. One is RV and another is with CA, Chartered Accountant Report for FEMA. It will be okay. Okay.
so merchant banker,
चलेगा.
Better you get a report from a registered valuer who is also a CA.
Absolutely correct. You can issue 2 reports as a capacity of registered valuer, as a capacity of CA also. You issue 2 reports, you give 2 bills, you receive 2 fees. ठीक है?
सर दो बिल का पैसा कोई नहीं देने वाला है सर, उसी
में मिल जाता है
सीए.
सर मिल जाता है वैसे, और नहीं मिलता है और नहीं मिलता है तो जो सीए लेकर आता है मैं उसको बोलता हूँ तुम इशू कर दो, और यू
बोलना पड़ता है कि भाई ये फलाने से होगा.
आई से आई विल हेल्प यू आउट, बट तुम इशू कर दो, तो दे गेट हैप्पी कि उनका भी धंधा चल गया है. ओके सर, इशू नंबर 5, does it mandatory for AO to exercise determining market value of shares in case if there is a case and AO has opened a case? So, and AO is abruptly adding, I think this should be the fair value. You have wrongly calculated. So he needs to obtain a report from some expert, or he can do on his own discretion.
He has to take expert opinion.
Expert.
Correct. Does section 56 subsection 2(7)(b) is applicable on CCDs? CCD, compulsory convertible debentures into equity, where the terms are predetermined. Terms are predetermined, matlab the exchange value and the exchange rate is predetermined. In this case, section 56(7)(b) is applicable or not?
No.
Technically, yes.
Yes.
Sir, see, if a company is issuing CCD where the terms are already defined, then it is not basically a CCD, is an equity.
Yes.
We in our report also treat it as an equity. Right. In that case, yes, valuation is required to be done. Issue number 7. If rounding off to nearest rupees are allowed in section 56(7)(b) or 56(10)(c), matlab 11 रुपए 90 पैसे आया, can we say 12 rupees?
No option is given in the rules.
No, I don't think so.
You have to take 11 rupees 90 paisa only. You cannot go with rounding off. Does it mandatory to get financial statement audited on financial statement? Already we have read audit. Yes, it is mandatory. Because balance sheet ka matlab 11 mein padha tha. These are the answers with logics where there's a settlement by any authority. We have included in that.
So for the last point, I have just one question. So on the valuation date, if they are not giving the audited certificate because audit is already done and
last audited financial statement available, you take that approach.
So last audited financial plus signed provisionals will do, right?
Yes, but I'll tell you one more thing. I'll add here. See, let us take a provisional balance sheet for a chance. Let us take a provisional balance sheet which is as near to audited. As near to audited. You derive the value, and the auditor said, "Ki, sir, this is the it's all about trust." Auditor said, "Sir, this is the exact figures we are going to get audited, but because AGM cannot be held before 21 days and we have all compliances, even if you take that value and the same balance sheet is adopted in your AGM, because the case will not come right away. It will take 2 or 3 years to come. Section 143(3) आएगा या 148 आ रहा है, वो आपके बाद में आएगा. So valuation date पे अगर आप उस तरह से सोचिए तो balance sheet will be available to you. Audited has been done, AGM approved नहीं हुआ है, हो जाएगा, तो you can, but it depends on you.
Disclaimer देके report कर सकते हो.
हाँ, कर सकते हैं. At least वो problem नहीं आएगी कि जुड़ जाए. I'm just giving you hint. Okay. Another few questions, a few doubts which have been cleared by authorities, cases, high courts or tribunals. Sir, question is, if shares are issued by subsidiaries to wholly owned holding company on a premium exceeding fair market value, money 10.5 rupees was 10 rupees 50 paisa was the fair market value, and the subsidiary issue shares to holding company at 12 rupees. Will section 56 subsection 7 56 to 7B is applicable or not? लगेगा कि नहीं लगेगा? What do you think? Just vague guesses will work out for me very well. Rajiv ji, लगना चाहिए कि नहीं?
There is no written exception for this, sir.
Sir, law has settled that you are yourself issuing shares to yourself, then no income is arrived because the fund is yours, the company is yours, wholly owned company. So the law has settled this query, and AO has added back, but tribunal has said कि no, this is not an income. And
ठीक है सर, यदि कोई ऑर्डर है तो ठीक है, बट यदि आप
Order है।
कंपनीज
Sir,
एक्ट
these
के
are-
हिसाब से
these-
जानो तो दो कंपनी अलग एंटिटी।
sir, these are yes, these are settled by courts. जो हम अभी discuss कर रहे
then
हैं,
it's
these
okay.
are-
It's okay then. Once court has pronounced it, it's okay.
This is why I have touched this point, sir.
Yeah.
Because these
Great.
are food for thoughts. SSE had issued shares on valuation value determined by independent valuer using DCF methodology. The AO rejected methodology on the ground that other method prescribed under UA, that is book value, is much better to reflect the fair market value, and passed the order and added back the income. Is AO justified? Well, AO has
choice is with the SSE.
The option to choose the methodology is with SSE, and AO has to just check the correctness and completeness and the completeness of the the format for the calculations. So AO is unjustified and tax will not be levied. The AO on scrutiny rejected the value of shares determined by DCF provided by the SSE on the basis that there was a significant difference in the actual performance and the projected figures. Already case 2-3 साल बाद लगता है, तो आपके पास projected figures थी, आपको actual figures भी आ गई हैं. The DCF was prepared on the basis of projections, and since the projections are high in comparison to actual figures, in next 2 years, the AO has rejected the report and added back the income. Can he do or not?
No, sir.
See, he cannot do, but in case there's a huge difference, there's a huge difference between, hello, ma'am, मैं एक बार क्लास ले रहा था, मैं मुझे नहीं, एक क्लास ले रहा था, सेमिनार ले रहा था. Okay, sorry. So what I'm saying कि the AO was not justified, of course, but if the projections are like मैं चांद तारे तुम्हारे लिए तोड़ लाऊंगा वाला projections with baseless projections, you have just prepared, the client has just prepared vague projections with too high growth, or no connection with trade receivables, trade payables, and everything is hanky panky, then of course AO has right to reject on the basis that the projection is baseless. Right?
In many of the decision, in fact 4 or 5 decisions we have of Supreme Court, where the valuation report is being accepted as such as the professional opinion of the valuer. At the time of giving valuation, the circumstances of that time has to be taken into consideration. In future, the management may change. In future, new technology may come. So this, variation of projections can always be. That is why projection is projection. It's not
projection. There will be always a variation, but the projection should be based on logic assumptions. There should be logical assumptions. For example, my trade payables should be depend on the sales. Number of days credit sales I'm giving, 21 days, 30 days, 60 days, 45 days, 90 days, whatever the thing is, there should be a logic while preparing a projections. It's not like kuch bhi dal diya. So in case there's a logic, at least some logic in the values, then yes, there is no question on that. It's nobody is God who can give or project the figures. I agree with you, sir.
Justify your report.
Yes,
that is there.
The projection should be, even in if you see CLDs, it is written that you need to discuss on the projections with client. If you're not happy with the projections, you need to discuss it, and you disclaim it that management is not agreeing with me. I am not concur with the management reply on this. So although my valuation is this, but I am not relying on the projections. Okay. Now next question is, a company optionally converted debentures into preference shares on price of OCD, whereas preference shares worth less at the time of conversion. Since there is a difference of NCFPF and the sums are collected at the time of OCD, AO has made right additions. AO is justified or not? Very technical question. Well, I'll tell you, AO is not justified because it is an optionally convertible debentures. It is not compulsory converted debentures. It's just an instrument. Now it is being converted into non-cumulative preference shares, and at the time of conversion of non-cumulative preference share, of course, the price of OCDs will be treated as a base value to buy NCPF. So the the competent authority says ki no, it's not like that and it's not required. Very important question, a good question to think of. SSE followed method of fair value land and building. Fair value means adjusted NAV की बात कर रहे हैं sir. SSE has followed adjusted NAV method to value land and building to arrive value of preference shares on premium for the purpose of issue of preference shares. Issue of shares क्या कहता है? Issue of shares कहता है book value 11 UA2 की बात कर रहा है, book value जहाँ लिखा हुआ है. Please remember, the client has adopted an adjusted NAV to arrive value of preference shares, right? The AO, the TPO adopted NAV method, that is book value, and he has recalculated the figures with using book value and he has added back the difference if he is justified or not.
No, sir. Preference share के लिए UA2
Not justified.
Should be added or not, sir?
No, not justified.
Justified है ना, because it is a book value method.
Book value method
preference
is used by
share के लिए सर book
AO.
value नहीं लिखा हुआ है.
Book value method is used by AO, whereas
Yeah.
net adjusted NAV is used by a company. He is justified by adding back the income.
Adjusted NAV is not allowed only for issue of shares.
But it's a preference share, sir.
Rajiv ji, your view? Astha madam, your view? Nagesh sir, we are going to end our session. थोड़ा सा हमारा बचा हुआ है. मेघा जी, your view?
I have no idea, sir.
कॉल के बताना क्या काम कर लिया. Okay, चारू मैडम, शिवा सर.
Not justified. I think what the value are done is correct.
See, Sushil sir is right. Shivaji sir is also right. Amit sir, yes, there's a formula given for valuation of unquoted equity shares. But when we talk about other securities, 11 UA sub rule 1 clause C say the fair market value of unquoted shares and securities other than equity shares in a company which are not listed in any recognized stock exchange shall be estimated to be the price it would fetch if sold in open market on the valuation date, and SSE may obtain report from merchant banker or accountant as the case may be.
Yeah. Okay. Yeah,
So
I missed.
now 11 UA 2 has given the formula to derive unquoted equity shares, but they are silent for other share warrants or preference shares or like that things. So in that case, the AO was not justified. The AO was not justified. It was observed by Bangalore IT bench that TPO is wrong and it would definitely fetch in the open market, and the value derived by the share value derived by the valuer is correct. Now let's talk about angel tax. Sir, angel tax, who is angel investors? HNIs having huge money. In our case, we had Shiva Prasad ji having huge money. He's an angel investor for us. So angel investor is a person who has a huge net worth, HNI person who gave a lot of money to startups and companies. So they are the angel investors. And what is angel tax? Angel tax is nothing but section 56(2)(7)(b) is the angel tax, where the fair market value, the consideration received is much more higher than the fair market value, and the difference is added back. It is the angel tax. Angel tax was there. Startups were facing huge tax liabilities before 2018. They were facing huge tax liabilities. Many cases were opened up, and angel tax was added back there. The company like Baiju, the startups companies who issue shares on huge premium and having a loss, and the Income Tax Act now added back the income and asking for tax. You see how the complex things were there. So the government came up with a circular. The CBDT recognized this problem. They came up with their circular, and the circular says, look, let me open the circular. Determination value. The circular came and it says that before 2018, all the cases, before 6 February 2018, all the cases which even have settled with taking angel tax as a part and added back to the company's profit. So all the cases were withdrawn, and angel taxation, to the extent the company is DPIIT registered and Form 2 has been duly submitted, then they have an immunity, as I've already discussed, under Section 256, Section 56, subsection 27B clause. So the company who are a startup, recognized startup as per income tax also, shall not be required to pay any angel tax. In this case, they're exempt, they're immune from it. Okay. Now let us take a small view about Section 56, subsection 7B and startups. Sir, a startup which is not 10 years old, young startup, having turnover less than 100 crores, if you invest in that, Section 56, 7B immunes you through that circular Form 2. But if your turnover is more than 100 crores, or you are a company which is more than 10 years old, then Section 56 to 7 immunity will not be given to you. Please remember that, and exemption of angel tax will not be there. DPIIT Form 2 मैं आपको दिखा देता हूँ how it is. Okay. This is a Form 2 declaration. This is a small declaration, but that is why it is called declaration form. So declaration form, to submit it to DPIIT, right? Should not be applicable. So this was all about, Section 56, subsection 2, clause 7B, Section 56, 10C. I'm open for discussion. Now, any question?
Please share this PPT if possible.
Absolutely, I will share my PPT and all the documents associated with that PPT, like Form 2, circulars, definition under Section 2, subsection 18 of public substantial interested. I will share everything. No worries about it. Any question? Those who want to download just my contact and scan the QR code directly, and you'll get all the entire, my mail ID, my Instagram ID to nahi dali maine, but most of the things you'll get from that. Those who are interested in social audit exam, although I have issued a book on social audit MCQ, and I'll upload few topics on my YouTube channel also for exam preparation. You may go and view that after some times.
I actually wanted to ask, like, what is the advantage, or how good it is in terms of revenue and the opportunity?
I'll take 2 minutes for social audit, just 2 minutes for creating awareness. There's a separate segment which is going to take place there's a separate segment in SC, NSC and BSC, or the recognized stock exchanges, which will deal with SSE, social stock exchange, and NGOs, Section 8 companies, trusts, societies for the charitable purpose. You may assist them to list their securities, their companies in SSE, social stock exchange. This is one of the opportunity. Then the companies which are listed on SSE are required to do audited to be done by social auditors, and the people who will clear the exam of social audit, they need to apply with ICAI, ICSI and ICMAI SAO for it, and then you are eligible to do audit, because there's a specific report, that is impact report, social impact report, which is to be audited and submitted to stock exchange every year within 60 days. So this is opportunity, ma'am. Okay, Rajesh sir has also cleared the exam from Lucknow. There are not so many people who have cleared the exam. Exam is very easy.
Sir, I have one.
Nandini ji, I am.
One thing I ask you, Ravi ji.
Sir.
One thing I ask, whether financial asset registered valuer can value the income tax act, sir?
No.
You are asking that whether registered valuer under a Companies Act can value
under IBBI, the registered valuer, SNM, whether
Sir, my answer is yes and no both. Yes, for section 56, subsection 2, clause 7b, that is issue of shares. Yes. My answer is no for section 56, clause section 2, clause 10c, that is transfer of shares. In case of transfer of shares, we cannot do it. In case of issue of shares, yes, we can do it for that book value calculation, not for DCF.
Okay.
I hope I am able to justify my position. I know the topic was very, just half a page topic, but it requires lot of mind application, that what are the implication which is going to, affect my client. So we all are consultant, and we are all, our bread and butter is involved around the client. They are the person we are giving service. So we need to take care, we need to advise them, we need to make things very transparent when they are with us, and also help other professionals also to understand, see, this is not just the registered valuer doing valuation. It is you also need to take care of section 56, subsection 2, 7 or 10 of your client. Any question, I am free to answer. It's already, I guess, 5:39. I don't want to touch the second topic of ours, because it is very, I think you have churned your minds. So if I continue with a topic which is not too tricky or too, conceptually, then you will be off track. I will request people, the members here, if you say I can take how to draft a valuation report if you're not tired, or else I can drop it and we will form another 1 hour session with the Beauty Foundation to
please continue.
Okay, great.
Your teaching is very good.
I am highly obliged, sir. Thank you for your nice words.
I started reading your book, Comprehensive Guide on Valuation, co-authored with Harish Damijaji.
Yes, sir. I hope you find it worth, sir. Also, it's very costly. I too think to, I have just ordered one because it's too costly.
I got a couple of advices regarding that particular book. Say, please split it into 2 or 3 parts. It is very difficult to handle that book. I gave such a session to Bloomsbury's Toby Thomas.
Although there's a bad news that we are not going to bring 3rd edition. There's some complexities involved. I don't want to continue with, don't want to tell here, but this I would love to bring in parts, part 1, part 2, but let's see. Okay, one more small issues.
Please update it after sometime, say after a couple of years, but make it into 2-3 parts.
There's some
issue. Same price, say make it whatever it is.
There's some issues which need to take care of, and I don't think it will work. I really hope that we again come with volume 3 with lot of changes there, lot of improved, how to draft valuation report. Every day I try to add something in my valuation report. Every day I try to add something new in my valuation report. My staff has closed the server. Just give me 2 minutes. I will open my server because the slide is in my server. I want to show a valuation report of land and building, but you can relate it with your valuation report. It's an amazingly amazing report. If I can download it through internet, just give me a minute. I think I may download it from internet directly. Okay, this is not allowing me. Blue book. Just a minute. Okay, I got it. Maybe it's the correct book. I'll take an excuse of 1 minute and just opening my server because my staff has just left office and my file is on the server. So just give me a minute. I'll be back in a minute. Okay. Okay, it'll take another half a minute, I guess, to reboot and the file will be available to me. Well, okay, next it is available to me. There's so many slides that I really got confused. Okay, I got it. Great. I want to just show Bill. So sorry, I'm trying to find. Just here with me for a few more minutes. It's a great way to write report. Where it is. Can anybody help me in downloading Blue Book? It's a valuation, just like valuation standards, a Blue Book valuation standards. Can anybody help me in that? I'm trying to find it. I have it in server somewhere. Don't know if somebody has touched that sensitive. Ah, right, got it. Yes. No, I got the folder. I'm having a trouble in finding that book. Valuation books, valuation. Valuation series. Finally. Thank God. I'm so sorry for wasting your precious time. Just a minute. It's open now. Okay. See what IBS 103 says. It talks about the valuation report. Right. 103, I guess. Huh? It gives certain 7 or 8 points which has to be there in your valuation report. Any valuation report, if you're missing those important points, then believe me, you are in trouble. As already I've said, valuation is more of story rather than numbers. We all agree with that. Who is wrong, who is right, and how to save our skins, how to save ourselves is the only shield is available is valuation standards. And as a Divya Jyoti Foundation member, we have to comply with the international valuation standards, and whatever the standards saying, we report should be based on that. IVS says that there are minimum points which needs to be there, like purpose, scope, intended users, date, right, methodology, basis. These are things it says.
Sir, one thing I want to ask you.
Yes, sir.
It is international valuation standard or international accepted valuation standard?
International valuation standard, sir, not international valuation accepted method.
I think it is written in the regulation, internationally accepted valuation standard.
Sir, in regulation, they have written that international valuation accepted method or the IVA or the standard adopted by your RVO.
Okay.
And our RVO has adopted IVS only. Even sir, blue book, red book, there are other valuation standards like red book is one of the standard, right? Blue book, they have been merged with, mostly they have merged with IVS, sir. They have got themselves merged with our red book with IVS.
Okay.
Even they have written red book is totally merged now. It says I am part of international valuation standards.
In India,
Sir,
except ICA, all others are following IVS. So we have to naturally follow.
Sorry, sir.
IVS.
Sorry, sir.
In India, except ICA, RVO, all others are following IVS standards only.
Sir,
So
Rule 8 of the Companies Act, Rule 8 of the Companies bracket Registered Valuers and Valuation Rules 2017 says that we have to follow standards. Standards given by Government of India. And in absence of the standards drafted or finalized by Government of India, the standards adopted by RVOs. Generally all the RVOs except ICI has adopted international valuation standards. ICI themselves got, because ICI always try to get themselves ahead of other institutes, they have issued their own standards. Their own standards, nevertheless, more of kind of same with IVS only. So that is why they are using ICA standards. Rest of us, we are using international standards. One more thing, sir. I have seen chartered accountants who are member of Divya Jyoti Foundation, and while they are drafting report, they are using valuation standards of ICAI. The CAs who are members of Divya Jyoti Foundation or any other foundation, any other this RVO, they are using. They're confused. Sometimes they're writing IVS, sometimes they're writing ICAI RVO standards. So what should be the correct procedure in that? Sir, apart from ICAI registered values, nobody will use ICAI standards until they are required to be done by RVO. So please remember that. That is very important. Sir, this...
So what about UDAN?
Sorry, sir.
So what about UDAN?
I am a member of Divya Jyoti Foundation, and I don't issue UDAN. I don't want to take another blow in my head.
What if somebody asks? If somebody asks,
nobody, sir. People ask me
yeah,
because there is in past 3 there's a UDAN, I guess, option. But I say them, you don't click for ICAI, IM Divjyoti Foundation RVO, and not required. But sooner or later, the talks are going on in the ministry, and I think Udin will be, there in a few months.
Mandatory.
See,
as a CMA, I'm using my Udin even for valuation stand.
Not required, sir. Sir, you are registered with Divjyoti Foundation?
No.
Are you registered? You are registered with?
IIB, Pune.
With which RVO, sir?
IIB, Pune.
So IBB must have adopted IVS, I guess.
Yes.
International Relations Matter. So you don't require to give Udin, sir.
Okay, but I understand that CMA.
See the act, sir. These acts are totally different. ICMI Act cannot rule the IBBI Act. So you get immune from Udin. Why to another blow? Complexities. You forgot to generate another problem. For 5 you have generated. For 6 you have forgot.
So it's IBC Companies Act.
Sorry, sir.
You said ICMI Act will not overlap IBBI. But it's Companies Act, I think. This regulation is Companies Act, no?
Ha, sir. Companies Act for audit purpose. ICAI. Yes. Sir, see, I am showing you a valuation report for land and building. But believe me, all the points which are there in your IVS are there in this report. And additionally, there are a lot of good points which you will see and you will really appreciate. This is very awesome kind of report. I will share it to everybody. See, start. First, the property. The property. Sir, I have never seen a valuation report. Maybe you use, but we never define the asset which is we going to value. For example, the asset to be valued is equity asset having face value ₹10. Uske baad, comma, the equity rights, each equity has one right, and there is no other class of equity issued by the company. Further, there is preference shares, or there is no preference shares, or there is a different CCDs, or there are no CCDs. First, try to give the idea of the asset which you are going to value for the company. A small write-up what the equity is. Second, the client. Who is your client? Identification of your client. So and so has appointed us for the purpose of valuation for further issue of shares. Appointment reference number so and so, if it is there, dated so and so. The stakeholders are so and so. Okay. Have you taken any reliance of third party? Right on the face that the client has given us such a report to be part of our valuation report. ठीक है, वो आपने लिख दिया. उसके बाद लिमिटेशन हम बाद में लिख सकते हैं, यहाँ पे लिखने की जरूरत नहीं लिमिटेशन. उसके बाद द वैल्यूअर. नाउ डिफाइनिंग योरसेल्फ. When you define yourself, you should be very particular about writing yourself. It should be look that you have a brilliant experience. Write a note for yourself when you are free, and use that note every time. Don't change your note, and change your note according to your experience also. Okay. Write your all degrees, your qualifications, status, you are independent valuer, external or not, very important to write the status. We are independent valuer. Confirmation about the experience and market knowledge necessary for the property. For example, if you are handling securities value, you write, I am expert in shares, securities, financial, I'm registered value of security and financial assets. What you can do is just write it. I am competent enough to value the share. And then there's no conflict of interest confirmation in your introduction only. Okay. The scope of work. Sir, what is the difference between scope of work and purpose of valuation? Anybody? What is the difference between scope of work? There's a small difference.
Scope is a very scope has got a wider meaning, whereas the purpose is limited to the
scope gives you the ground, the limit of ground where you can run, you can inspect, you can run throughout the ground. It gives you a specific limitation.
Engagement terms and conditions.
Yes, it gives you boundary under which you have to work. You need not to go outside the boundary, because you will take another monkey on your shoulder. There's an old Chinese saying, don't keep monkey on your shoulders. If you got a specific scope, you do your work under specific scope. Number one. Purpose is the reason why you're doing valuation. It is simply as that. You are doing valuation for mortgage loan, you are doing valuation for banks, you are doing valuation for taxation, you are doing valuation for let's say further issue of shares, you're doing for ESOP. This is your purpose, the reason why you're doing valuation. A scope is the boundary under which you can do valuation. This is the certain points under which I can do valuation, right? Okay. Now defining the words. So in the very beginning, I have used two words, premise and basis. We don't tell what value we are deriving and for what we are deriving. I am deriving fair value. I am deriving fair value for issue of shares under Companies Act 62. And then what is mean by issue of shares? I probably write section 62 also. If there's issue of shares, then I completely write what section 62 says, so that the user may know, because user don't know Companies Act. You are trying to tell user what is your report all about. So I write section 62, entire section 62 I copy paste. Sometimes I need to copy paste rule 12A also, right? In case I'm doing valuation for income tax, I write section 56, then I write 11U, then I write 11UA to get the user understand what is the section, what is the rule all about. Then what are the investigation you have carried out? You have done, you have talked, you have got the reports verified from MCA and all. Whatever you have done, you can write here. What are the available information available? I got projections, I got valuation of land and building, I got audited financial statement, I got the scope, the measurement data, I got so and so, whatever volume information you got. Then the inspection, what kind of inspection you have done? You have done inspection through MCA, you have done inspection through the site about the company and various, whatever you have done for the due diligence, you can write here.
May I interrupt?
Yes, sir, please.
In the case of valuation of SFA, then do we need to inspect the property or premises of the CD in the case of IBC or our client?
Sir, see section 247 subsection 2 clause B, I guess. No, clause B is for fit. Clause C, I guess. It talks about due diligence. So we cannot ignore that part. Due diligence is very important part of our job. But for SFA, you need not to visit the client side. You need to do due diligence regarding the valuation report. You got a valuation report, you can call the person who has done valuation report. You can ask him, sir, this is a report issued by you. You can go to MCA website. You can download the company's data, entire company's data, to check if everything is okay with that or not. You can ask for bank statement, stamped bank statement. Also, you can ask income tax assessment. I mean, if there is a huge penalty imposed by the income tax department and the SSE has not recognized that liability in the companies, then definitely they're going to impact the cash flows as well as the asset value, the adjusted net asset value. So these are kind of investigation you can do on your part, or in case you can leave with MRL also, please give us the status that no penalty and these things are outstanding in your company, whatever the things are. Then
Is such a report available in case of SFP also?
Sir, my report is available on, I have done a valuation report for a listed company. So Banka Bailu, I guess. So it is available on NSC website. Other reports, because of the legal, statutory compliance, we sign a pact with clients that I'll not share my report with anyone. So this is the reason I cannot give you that particular report. But yes, Banka Value report is available, like I said, for merger. It is available on website, and lot of valuation reports are available on NSC websites as a compliance. As a, it's now public document, so I don't have any problem sharing that. You can find another valuation, sir, also in NSC for companies. If there is any right issue, even the listed company do valuation for right issue, right? For example, Abhi Reliance has offered shares at 1200 something rupees a year back. So they have done through valuation only. So you can go to their NSC website and try to find things. You will get valuation report very easily there. Okay. Now the legal situation, the company, as I told, the long penalties imposed on it, or their legal something is going on, some investigation by an enforcement directorate, some information, some legal situation is going on. The company's employee have done some big case on the company. Whatever the legal situation, you can write it. You can write it. It's not like you have to write it. You can mention it, because it will impact your WACC, it will impact your cash flows, it will impact the cash flows as well. Okay. Now comes the valuation part. What is the methodology? You are adopting it, and you need to write all the 3 valuation approaches, and you have to tell the user why I'm not using this approach and why I'm using this approach. You need to write the reason behind it. So you need to write the valuation, CCM or whatever you have done, then the valuation, then the conclusion. When you derive the valuation, then here comes conclusion. And the conclusion starts with clearly stating what is the number you derive, you confirm the value, then the date of valuation, then you clearly state that the currency, which currency you had adopted, India, INR, dollar, whatever it is. उसके बाद CLDs, then comes to your CLDs. CLDs आपको डालने हैं उसके बाद. So this is entire part of your valuation report. What I add more, few things I add more, sorry. One is which standard I'm using. I want to tell the user I'm using international valuation standards. I want to tell the user that my premise, the basis, the foundation is going concern or liquidation status of the company. What is the premise? I also write it so that the user can know my intentions, how I'm deriving. While computing WACC, I prefer to write down the risk-free rate, that is 10 years T-notes, or the market risk RP, what I got through, let's say, Damodaran website, or I got through calculation from BSc and SC से निकालते हैं 10-15 साल का CAGR. For the purpose of beta, I'm using Damodaran beta, or I'm using 1. What is my reason? Or I'm using comparable companies beta, average beta, unlevered beta. So whatever I'm using, I write them so that a proper disclosure, my report should be transparent.
Raviji, another interruption. Say, while taking the beta, can we go for Damodaran's beta, or do we have to take comparable companies beta and unlevered and leverage?
Sir, I got an opportunity to be the student of Damodaran, sir.
Okay.
And if I start talking what he said, what we are doing is not evaluation, of course. Okay. Second, Damodaran, why I take Damodaran beta? There's a reason why even if I have a beta for market comparable, even then I take Damodaran beta. The reason is Damodaran has taken the entire company in India in that particular sector, and then he averaged it, and then he unlevered it. So
But
you are
it's
taking
the industry as a whole, but can we correlate the same rate to the particular client? The
sir, see,
company's financials may be different from the industry average.
I tell you, sir, this is the question. This is that question I raised him. He said, how can we use industry average beta for my company, which have a different cash flows and different scenario? He said, it's better to have some logic rather than no logic. At least you have a backup that I have used. My value is coming from the average of the industry. At least I have some basis. Then I'm taking 9.2 or 9.3 or 7.7 or 1. So he said, see, when you are doing valuation, it's all about the data. How you can mine the data. It's all about the data. And unfortunately, we don't have the backup, how we derive that beta and all. So after that discussion, I understood. Yes, it is better to take some backup or some logic rather than having no logic, or rather than assuming things. He said, you assume 9.98. I don't have any problem. But how you assumed it? He said, how you assumed it? 0.98. If I am saying the average beta is 0.77 and you are assuming 0.98, maybe you are right. But what is the backup behind it? What is the logic behind it? When it comes to logic, you don't have any answer. At least you have some answer, ki, sir, this is industry average. And I believe my company will have the same regression with the market in terms of riskiness, unsystematic risk. So this was the answer I got, and I was thoroughly satisfied with the answer. At least I have some backup with me, and somebody will ask, I'll say, sir, this is the reason why I've taken it. And believe me, it is accepted.
Industry is not covered in the Damodar's list.
Sorry, sir?
Sometimes the client's industry is not covered in the Damodar's list.
Again, a question I have asked, very well raised point. Again, a question I've asked. He said, then you have to link with the company having kind of similar nature. For example, there is a company having distribution of oil. They are doing distribution of oil. Let's say you don't have beta for distribution of oil. Then you go to the production of oil. The company who is producing the oil or extracting the oil, your company, supplying company, business depend on the company of the company who is extracting the oil. So he said, at least you have some foundation, at least you have some ground on which you can take some kind of reliance. You can add 0.2% more. That is okay, logical. Sir, I am taking this more, adding some risk more, because there might be a lot of competition in my area rather than having a competition in oil extracting companies. So I'm adding, let's say 0.05 or 0.5%. So at least you got some base, sir. Having a base or without a base, it's better to have a base.
So you mean nearest industry?
Nearest industries, and then you can add few of your discount with your logic. So see, nobody's going to challenge your beta, because the person who's challenging beta, he also don't know how to compute beta. This is the biggest advantage in valuation industry. The person who is asking you something, you don't have any idea what is going on. When everybody has no idea, then you have an idea, it's better, it's good. At least you have an idea how to compute it. Any other question?
You're not asset.
Of course, see, your cash flows are impure, your discount factor is impure, your company specific risk is impure, your beta is impure, your you name it, your DELOM is impure. So everything is impure. At least having some base will give you a little bit, confidence. Yes, I am at least having a story. This is why I say write a story. If my valuation report is of 40 pages, I write 38 pages to write up my story. and then 2 pages for valuation. I am not saying I am the best in valuation. My valuation is always right, and I'm confident about my valuation. I'm never ever confident about my valuation, I tell you.
So how DLOB is impure?
Sorry, sir.
So DLOB is impure or pure?
DLOM is impure because you don't have any value.
Basis,
Sometimes
yeah.
I some the Big Fours. I was reading some articles of Big Four. They said 40 to 60% should be the DLOM.
Okay. Good.
40 to 60%. Sometimes I use.
That helps to adjust the value of the share.
I'll not comment on that.
Yes, sir.
Being recorded classes.
Yeah,
So I'm telling you,
you have covered some specific formats in your book.
Yes, in DLOM we have covered.
Specific format of the valuation.
Sir, we have covered for IBBI valuation format and also for valuation for a normal company for the shares. If I come with another book, then that will be on valuation specimens only.
So of late, IBBI valuations have been risky.
Sorry, sir.
Of late, IBBI valuations have been getting riskier nowadays.
Very risky, sir. Very risky. It's been four years, I guess, as a valuer. I believe. I'm not sure about it. I have not taken any assignment of IBBI.
Yes, sir.
Insolvency. I have declined. I have declined it strictly. I have declined. No, I am not.
When we are doing the same nowadays, payments
Even
also
I
getting delayed.
Even I had a word with Sumit Dhada ji. I got a chance to meet him in Lucknow. He had a session in Lucknow. So I asked him, sir, have you done any valuation for insolvency? He said no. I guess one he has done only. He has no, I have not done. I'll not do also. It's a little bit risky.
And also payment is also very big deal.
It's exactly correct, sir. So I'm open to all. Already you're taking your 15 minutes more.
Yes, sir. Thank you, sir. So nice.
I hope I justified my position today and gave you some insight in the sessions. Any question? I'm open to you all, and any feedback, I'm open to you.
Very encouraging session. Thank you very much.
Okay. Over to Devjyoti Foundation.
Share your PPT and the
absolutely.
Yes, we will share, sir. We will share.
Thank you.
Absolutely. I'll share in just. Go with it, sir.
Shall we close, sir?
Yes, sir. We can close it. Thank you, being a lovely audience.
Yes.
Thank you.
And I thank our speaker, Sri Ravi Chaudhary, sir, for taking this session, associating with us. Sir, you have covered the topic very nicely, and very complex issues have been discussed in today's CEP. And this is for what CEP is all about. We have to discuss latest issues and complex issues. Thank you, participants, for participating in this CEP.
Thank you, sir.
Please continue to participate in our CEPs organized by us, and please share your feedback. Thank you very much. Thank you, Sarita. Thank you.
Thank you, being a lovely audience. It was wonderful to be with you all, and I hope to see you more as a speaker as well. And I will say, come as a speaker. Let's discuss issues, because nobody is perfect in valuation, and we all are, students of valuation. And you come up with some discussions, we'll discuss it. Thank you so much. Signing out now. Thank you all. Thank you, Devjyoti Foundation.